Good morning, everybody. Welcome back to another episode of the Market Open. We are live. It is Tuesday, October 21st. And, well, we've got a pretty interesting pre-market in terms of what's going on. There's a lot of different headlines, a lot of different narratives, a lot of different stories that we'll get to cover. I think the most important thing, even though there's a lot of things, but I think the thing that a lot of people might be seeing right now is silver getting hit bad. 5% down on silver, and gold is going down with it by about 3%, and copper the same way as well. You're seeing the commodities for the first time in almost, I would say, a month, actually having like a meaningful hit in the pre-markets. Usually these things are pretty green, and so you got a lot of people wondering so far in the pre-markets, hey, is this the beginning of the commodities officially taking a breather, potentially not continuing to go up 1 or 2% every day? But we're going to see. Isn't that what your uncle is into? My uncle texted me this morning saying he literally sold all of his silver yesterday. He was like, dude, I'm pretty good at timing. I was like, that's an impressive sell. I'm not going to lie. If you sold at 54 and this thing's now at 49, that's impressive. He still has a lot of copper, though, but he got into copper really early. So he's in that trade. But yeah, even I woke up this morning and I saw it and I was like, that's a nasty, because, you know, if silver loses certain key levels, it's not that easy for it to just get it. It's not like a stock where they can announce something and then boom, it goes back. Like commodities are more based on macro cycles, supply and demand, and not necessarily earnings growth, right? There is no earnings. So it would be interesting to see if this 5% drawdown is just, hey, it was running hot, it took a little bit of a breather, or if it's like, all right, we're done with commodities and we're moving on. But we're going to keep attention to that story, see what we've got going on, and keep going from there. We got a lot of updates in the world of AI. The Wall Street Journal published a massive story last night around Nvidia and OpenAI. So we'll talk about that and see what we've got going on there. S&P 500, 671.62 in the pre-markets. We closed above 671 yesterday, which was very bullish to see. We are $2 away from all-time highs on the S&P 500, even in the midst of some of the volatility we've had in October. And we've got a lot of the macro stats for October that we'll take a look at. But it's nice to see that the S&P 500 is at least doing okay, and the broader markets are doing all right. Bitcoin and Ethereum as well. Bitcoin basically flat on the day, 109. Ethereum, 3,800. Nothing too crazy there. Both of them have been relatively flat from yesterday. The Mag 7s have done pretty okay over the past couple of days now. Amazon, 218, even after the massive AWS outage. Meta back to 736. Meta was at 690 last week. Google breaking above 255 once again. It doesn't look like the Mag 7s are necessarily in that bad of a situation. Tesla right here, 446. We will have Netflix earnings after the bell. We're going to still have Technical Tuesday today. We'll do Netflix for like 20 minutes, and then we'll have Jason on, and we'll do Technical Tuesday. But Netflix, 1245. I mean, it's basically where it was at before the last earnings. It's still up about 30% for the year, so maybe this is the breakout quarter. But Netflix will be having today, and then Tesla will be happening tomorrow. And we will keep going from there and see what happens. Ackman is on CNBC. Really? Did Bill Ackman go on CNBC today? Let me see if he's on. Oh, wow, he is on. Okay, so let's listen to Ackman for a little bit, see, get some of his perspectives, and then I'll get into all my stories. But let's pull this up right here, and then we'll keep going from there.
York, I care about this city. I've put a lot of energy in keeping this city safe. The polls, the facts just tell me I'm not going to as a fiduciary for the shareholders of the company. And if you can locate the business in Miami and eliminate 21 percentage points of corporate tax, he's going to do that, right? So the matching New Jersey and forgetting that there's also New York City, New York City and New York State, taxes here. It's going to destroy the city.
There are national Republicans. They like New York, but they don't live here, and they think Republicans win the midterms if this guy gets elected and becomes it. The Democrats have a real problem, whether they endorse this guy or whether they accept him, because it's just.
Okay, so it's more politics. I thought it would be business and stuff about the markets. He's trying to get Zohan to not get elected. It is what it is. Dude, that New York City election is going to be one of the most anticipated elections. I personally believe Zohan's going to win because I don't know how Cuomo beats him in the polls, but we're going to see. I think, November 4th, November 5th? We'll see what happens. And New York will have to live with the choices that they make. So I guess we're going to see how this ends up playing out over the coming weeks. I am curious what this does to like national politics when New York City, New York City, San Francisco, Chicago, these are the major cities that kind of set the tone in certain areas. So I would be curious to see if he is elected, kind of how the national political landscape evolves. But we'll be covering that in November when that ends up actually happening. Okay, so let's get into our macro stories for the day, and then we will keep going from there. We also had a ton of earnings this morning, Coca-Cola, GM. So we'll get into all those earnings as well, and we'll see what we've got there. I think let's start off with the Nvidia news. Let's start off with the Nvidia news because I read this story last night and I could not believe what the Wall Street Journal said, but it really does sound more legit than not when you think of it. So this was the story that Wall Street Journal published last night. And the idea was, hey, how Sam Altman tied tech's biggest players to OpenAI. The thesis of the story essentially being that Sam Altman is making sure that Nvidia, AMD, Broadcom, Oracle, all these companies, they're not going to succeed without him. And he's going to make sure that OpenAI becomes too big to fail in case they ever think that OpenAI could fail. It's actually a very smart strategic move that Sam Altman is planning, but it's also kind of crazy to see how he's doing it. So let me read a little bit from this part of the article, which I thought was fascinating. So on June 27th, the tech site The Information published a report stating that OpenAI had begun renting Google's TPU chips to power ChatGPT, causing something of a stir inside NVIDIA's Santa Clara headquarters. I think I was live that day when that story actually broke. At the time, it was well known that OpenAI was looking for ways to reduce its reliance on NVIDIA. The startup was busy designing its own custom chip with Broadcom and was also taking a close look at the chips offered by NVIDIA rival AMD. That spring, OpenAI also signed its first cloud contract with Google, raising the specter that it might begin using its chips as well. After the story was published, Jensen called Altman asking him if it was true and signaled that he was open to getting the talks back on track, according to people familiar with the matter. Huang realized that NVIDIA could help OpenAI by making a direct investment in the company, a person who spoke to him said. NVIDIA's X account then posted a screenshot, if you guys remember that, of an article when OpenAI denied having plans to use Google's in-house chip. NVIDIA ended up signing an agreement a couple weeks ago to lease up to 5 million of its chips to OpenAI, costing $350 billion by today's standards. It also has the right to invest up to $100 billion to help the startup pay for a deal. So what happened? Basically, if you go further into the story, the Wall Street Journal says Sam Altman tried to make Jensen have a sense of FOMO. And the idea of the FOMO was exploring ways that they could get off the NVIDIA reliance that they're on. And one of the biggest competitors to that was Google's TPUs, primarily because Google's TPUs are not like massive competitors to NVIDIA GPUs, but the threat of them becoming competitors is something Jensen probably doesn't want to deal with. And if one of your biggest customers is going to use those TPUs, well, that'll warrant a phone call. That will definitely warrant a phone call. And so Sam gets Jensen to get scared of Google, then gets him to invest $100 billion and tells him, okay, we're not going to be, working with Google. And then 3 months later, the deal is announced. After the deal is made, Sam went and gets deals with Broadcom and AMD. And by the way, you can tell Jensen didn't know about it. He was on CNBC 2 weeks ago, and they asked him, what do you think about the AMD deal? And he basically threw a lot of shade and said, I don't know why you would give up 10% of your company if you were so confident in your chip. And you could tell that Sam Altman probably didn't tell him, hey, by the way, we're going to go get some more deals, because that wouldn't probably get the $100 billion deal done officially that Jensen made with him. But he gets that deal secured and then goes and gets other deals. The punchline is that Altman is ruthlessly trying to make sure that if AI ends up becoming the transformational technology we all think it can become, he is going to be at the center of it. I think this is kind of scary and amazing to witness at the same time. The reason it's scary is because OpenAI cannot fail. These guys simply cannot fail. And if they fail, the linchpin of how we think of AI as an ecosystem probably ceases to exist. I mean, you've got other competitors that are out there that are probably going to make a good attempt at making AI real. But OpenAI is the one that is intertwined with these billions of dollars of contracts with Oracle, AMD, Nvidia, et cetera. And so we're going to really have to see how this ends up playing out. But nonetheless, that's what you've got with OpenAI. And ultimately, Nvidia is at the center of it now. Whether Jensen likes it or not, he is at the center of how this plays out. Nvidia right there, 183.05, slightly green in the pre-markets as well. Isn't this what you want in a CEO? Yes. I mean, Technically, that is what you want in a CEO, but it's also one of those things where, he gets a reputation of being a snake. SoFi, by the way, 28.80, trying to get up to 29. It was up 9% yesterday. He gets that reputation of being a snake. And, sometimes a snake helps you secure deals in business. Other times it just makes people not want to work with you. And, maybe this is one of those scenarios where people might not want to work with them. But at the end of the day, it's freaking OpenAI. They have the best LLM, or I should say the fastest growing LLM that's out there. It's hard to imagine people don't want to work with OpenAI. And so I don't know. It's fascinating to see. I think for the sake of all of our portfolios, OpenAI does need to work, whether you like Sam or not. But they are too intertwined with Nvidia, Broadcom, and AMD, and a host of other companies. I mean, Oracle's literal RPO growth, the 500 billion in RPO, 300 billion out of the 500 billion was OpenAI. If not, it would have been 200 billion, which is still good remaining performance obligation growth, but it's not the type of explosive growth that brought the market cap up to almost $1 trillion. So this thing has to work for OpenAI. And if it doesn't, we're likely going to have some issues. Let me go to what Elon said yesterday. So remember that clip I said about Sean Duffy basically opening up the SpaceX contract? Here's the clip, and then Elon actually responded to it this morning for the moon contract with SpaceX.
Now, SpaceX had the contract for Artemis 3. By the way, I love SpaceX. It's an amazing company. The problem is they're behind. They pushed their timelines out, and we're in a race against China. The president and I want to get to the moon in this president's term. So I'm going to open up the contract. I'm going to let other space companies compete with SpaceX, like Blue Origin. And again, whatever one can get us there first to the moon, we're going to take. And if SpaceX is behind, but Blue Origin can do it before them, good on Blue Origin. But by the way, we also might have two companies that can get us back to the moon in 2028. But again, we're not going to wait for one company. We're going to push this forward and win the second space race against the Chinese, get back to the moon, set up a camp, a base, and from there, we're going to figure out how we can actually get to Mars. Now, SpaceX had.
So that's bullish Rocket Lab, potentially bullish Blue Origin, bullish a lot of the other space companies that are smaller that might bid for it. Elon's response was, why are you gay? This is the world's richest man, folks. This is the world's richest man. You got to love it. You got to love it, bro. I don't know if we will have in history a person of his wealth being able to respond to these high-level officials like this ever again in history. So Elon's response is like, bro, like, I know you're trying to seem like you're embracing meritocracy by opening up the ability for other companies to compete with SpaceX, but you realize if SpaceX is slow on the contract, you think any of these other guys are going to be faster than us? I think that's what Elon's basically implying right here. And so, we're going to see how this ends up playing out, but I did think this was funny. So this was Elon's response as a result to what Sean Duffy said, which it also does make sense, dude. I mean, look, going back to the moon, we haven't been there in 54 years. It's not the easiest thing to do. So if SpaceX is a little bit behind on their goals, it's like, okay, I'm not sure how many other space companies are that much more advanced than SpaceX to be able to figure this out quicker. Maybe some of them are, we're going to see, but overall, it does seem like SpaceX should still have a good shot of ending up to get this deal. So that's what we got there in the context of Elon and SpaceX. All right, let's get into some macro news because we got a bunch of other things happening in the macro. First of all, let's just get through earnings. We got a lot of earnings. Let me know if any of you guys own these names in the chat, but let's go through them one by one. Most of them I'm looking at a beat on the top and the bottom, which is really good. So let's pull these up right here. So first, Galaxy Digital. I think a lot of you guys, or not a lot, but a decent chunk of you own this one. Take a look at this. EPS is up 1,000% year over year. They beat by 261%. And then revenue is also up substantially. Revenue is up 235% year over year. They beat that by 90%. Galaxy is up 9% on the day. Why is this happening? Well, the AI HPC market is becoming massive. And a lot of these Bitcoin miners that have pivoted their business are starting to lean in to that growth. And so these are just crazy numbers. I mean, beating EPS by 80 cents, beating revenue by 9 minus 15. That's basically what? 14 billion, 29 billion versus 15 billion expected. It's quite incredible. And as a result, you're seeing the stock price get some momentum. Then you got Coca-Cola, 82 cents versus 78 cents. That's a beat by 5%, 12.4 versus 12.4 billion on revenue. That's a slight beat. Revenue's up 4% year over year. EPS is up 6% year over year. Coca-Cola is up 3%. Coca-Cola is up 3%. So you got those two earnings going up pretty well. Then you have 3M, another company, EPS 219 versus 207. That's a beat by 6%. Revenue 6.3 versus 6.25. That is a beat by 1%. Revenue's up 4% year over year. EPS is up 11% year over year. 3M is up 1% in the pre-market. Then you had GM. This was actually a pretty good quarter. They beat by 21%, 280 versus 232. So they beat by about 40 cents right there. And then 48.5 versus 45.3. They beat by 7% on revenue. Revenue is still down year over year, and so is EPS, but they did beat on both of those metrics for the top and the bottom against the street expectations. GM, wow, I actually did not look at the stock all morning, up 11% on the day. 11% on the day. Now, you know, a lot of people are expecting an 11% move or a 10% move. I think the implied volatility is like an 8.2% for Tesla going into tomorrow's earnings. It's just the expectations might be a little higher. So, you know, GM had some pretty high expectations. They came out and they beat them. So now it's just the question of, can Tesla beat some of those expectations? And if they do, maybe that one gets some love. And then you have General Electric beat by 13% on EPS, 166 versus 147, 11.3 versus 10.4 billion. EPS is up 44% year over year. Revenue is up 26% year over year. The punchline to all these earnings, GE is up 2.4%, is that so far, pretty much every company that matters has either beat on the top and the bottom line, or they've slightly came in line with expectations on one or the other. Very few of them have actually missed a revenue and earnings estimate. And this is, we're talking about Coca-Cola, we're talking about Bitcoin miners, we're talking about banks, we're talking about semiconductors with TSM and ASML. Like, you've got a wide diversity of all these different companies that are putting up the earnings growth that we saw in Q2, which was quite phenomenal across the board, beating by about almost 8.5%. If that continues in Q3, I think we have some momentum. The other big company that we had today was Elevance Health, another healthcare company. They beat by 22% on EPS, 603 versus 494, and then 50 versus 49.5 billion. That stock, I believe, is also up in the pre-markets. Yeah, up about 2% as well. Not too bad. Not too bad. We're getting a lot of these companies put up some numbers, and those numbers are resulting in some decent earnings growth across the board. Wow, we got a headline right here. The Saudi prince is going to be visiting the White House on November 18th. Huh. Wow. Bin Salman's coming to the White House. Last time he came, you guys remember? Last time he came was they signed a $150 billion defense contract. And the Saudis basically bought our tanks and guns and weapons and all this other stuff. And he was in the Oval Office with Trump, and Trump was like, oh, this is just peanuts for you. You can even buy more. Looks like he's coming back November 18th. November 18th is going to be a Tuesday. All right. So you got the Saudis coming back to the U.S., and hopefully we're going to get some more deals that are announced with the Saudis, particularly in regards to AI. Raytheon had earnings today as well. I didn't even know Raytheon had earnings today. Raytheon, wow, 5.28%. Look at that. Looks like Raytheon had a double beat. I didn't even see the earnings, but looks like Raytheon as well had a double beat. So again, you're just seeing more and more excitement across the board on these earnings. Yeah, revenue 22.4 versus 21.7, and then EPS 170 versus 141. That's up 17% year over year. Revenue's up 12% year over year. Both of these are beating, whether it's defense, Coca-Cola, semiconductors, Bitcoin miners, banks. I mean, you're just seeing a lot of different industries put up the numbers that really do matter. And so that's what we got. EOSE, this one's running in the pre-markets. I don't know the headline on this one. EOS is up 19%. It was actually down 19% last week. I think on like a random Tuesday, it got hit when American Batteries got hit. The news is they're expanding their Pennsylvania operations with a $24 million state-backed package to build a new 432,000 square feet facility in Marshall Township. The project will boost battery production to 8 gigawatts a year. Wow. Support 1,000 jobs and advance their zinc-based long-duration energy storage tech as a part of their newest project. All right, there you go. If you are an EOSE, congratulations. This one is definitely a volatile name. That looks like a pretty damn good deal they got this morning, especially because it's backed by the state itself. And 8 gigawatts a year of battery production is quite incredible to see if they can get that out there. But looks like that is one of the news, one of the headlines that's getting it to get some momentum. They're meeting with Governor Shapiro today. Okay, well, that also should be helping them as well. Why are you guys saying Michael J. Fox passed away in the chat? Is that true? Because I don't see any headline saying Michael J. Fox passed away. Can we not joke about people passing away, please? Like, I get the trolling is fun, but can we not joke about that? Like, can we have some line that we don't cross? Okay, he didn't, right? Because I just searched it up and I don't see that either. Yeah, can we please not joke about people dying? That's like not the funnest thing to do in the morning, and then have to see if that's true or not. All right, cool. So Michael J. Fox did not die. Good. You know, Back to the Future. I don't watch a lot of movies. I watched it last year and I really enjoyed it. I enjoyed Back to the Future 2 as well. And then I didn't see the third one because the third one looked like it was some cowboy shit. And I was like, I don't really like cowboys on it. But the first two were really good. And I only watched it because I had a Dan Ives moment with Vlad. I asked Vlad on the podcast back in March of 2024, what's your favorite movie? He said Back to the Future. And I just nodded my head. I was like, classic. That was great. And then I had to watch. I couldn't lie to Vlad. I had to watch it. And then I tweeted that I watched it in like April of 2024. And Vlad commented under. He was like, you should watch the Broadway special too. And you should watch the second one. I was like, yep, I will do that. I will do that, Mr. Tenet. All right, Goldman Sachs CEO, David Solomon. They crushed earnings last week. Yet to say about where we are in the state of AI and the markets.
Bubbles just over the last week, bubbles in AI, bubbles in markets. You don't particularly like that term. It's not one you want to use yourself.
Yeah, you know, I don't like to be, you know, over dramatic.
The bubble and bubbles.
You know, I've been looking at tech multiples and trying to put tech multiples in a historical context. You know, I've looked at a variety of data on public company tech multiples and, you know, also private capital formation for tech companies. And it strikes me that, you know, that the multiples are kind of 75th percentile or 80th percentile. So there's no question, you know, we're somewhere in a cycle where the values are higher, but the growth opportunity coming from AI is significant. But I'm certainly in the camp that they're going to be winners and losers. Capital's been allocated to companies that are going to be hugely important companies, and it's going to be allocated to companies that ultimately, you know, won't make it or won't succeed in that context. And ultimately, whenever we have a new technology, especially at scale, and you have significant capital formation around it, you know, they're going to be winners or losers. We're not smart enough, you know, to pick them all. And ultimately, there's a rebalancing. But I think the long-term trends around this technology, the opportunity for productivity gains for some great companies to be formed is really quite exciting.
How about how you're using it internally at Goldman Sachs? Because you've made a lot of comments in the past about how this can really do the work for investment bankers much faster.
Well, I think there are a couple of base ways that we're using it. We're very focused on this. The first is we've always, I mean, since I started 40 some years ago, we get technology tools into the hands of really smart people to make them more productive. So I always joke about doing a common stock comparison 40 years ago. It took 6 hours. You had to go to the library, go get microfiche to get back issues of the Wall Street Journal. Now somebody can do it in seconds. It doesn't mean we don't have a lot of very smart young people doing a lot of work. They're just doing different work than they did when I started 40 years ago. And so we continue to get these tools into the hands of our very smart people, and it makes them more productive. It gives them an ability to spend more time with clients, to do more. It scales our footprint, our reach. The more interesting thing we're spending a lot of time on, you might have seen last week, Becky, that we put out a memo where we announced what we're calling One Goldman Sachs 3.0, the evolution of our One Goldman Sachs operating ethos, is we're really looking at 6 principles, you know, throughout the firm to operate the firm more efficiently, serve clients better, where we're looking at processes inside the firm and saying this technology gives us the right and the ability for the first time to reimagine these processes and really do them entirely differently, to automate a bunch of things, to create meaningful efficiency that then can be reinvested in growth in the business. It's not just...
You know, the exciting thing about what he's saying right there is that Jamie Dimon was making the same argument as well. A lot of these banks are seeing that there are internal efficiencies that they can operate in if they effectively use AI. The question is, how quick can that lead to an ROI for the overall bank itself? And, you know, the earnings from these banks, again, outside of a couple regional banks, which, by the way, Zion's, they had earnings yesterday. Apparently last week we got like a preliminary part of their earnings with this charge off that they legally had to report. And that's what caused all the concern about the regional banks having a credit crisis. They reported earnings yesterday. They demolished earnings. They had 56 million in charge offs. 50 million of that was the fraud charge off that they had to legally report last week, which caused everyone to get scared about the regional banks. They only had an extra 6 million of charge-offs of like quote unquote default or bad loans. So their earnings were great. And so were the rest of the regional banks that reported last week. So every single bank that is reported, including Goldman Sachs, has beat definitively on the top and the bottom line. And, I think it's maybe too early to say if that's all because of AI, but based on what David Solomon is saying, a lot of it seems like it could turn into the ecosystem of AI, as he's mentioning, becoming more and more important. And if that doesn't stop, then we should be in for a little bit more earnings growth over the next coming years. And speaking of earnings growth and AI efficiency, this is what Amazon reported today, or this is at least what the New York Times reported today for Amazon. Amazon is reportedly hoping its robots can replace more than 600,000 jobs it would otherwise have to hire in the United States by 2033. So, when you think of AI transforming an enterprise, for Goldman Sachs, it would be making the way they do underwriting, the way they do M&A, IPOs, et cetera, more efficient. For Amazon, it's physical labor that they are trying to automate away, likely with humanoid robots. Maybe they're going to buy it from Tesla. Maybe they're going to buy it from Figure. Maybe they buy it from Medtronic. Maybe they build it themselves. But this is happening. This is going to happen, whether it's in 5 years or 10 years. There is just no way a business is going to look at the potential of using AI in the physical form as a cheaper, significantly cheaper alternative to a human and not take that opportunity. So the question is going to be, how does society prepare for that? But this is something that likely is going to play out. And whether it's Goldman Sachs or Amazon, all of these guys are trying to see how AI can transform the entire industry. Which again brings up the ethical question of just like, okay, if we're going to transform all these industries and increase shareholder returns by increasing profit margins, what happens to human beings that like need a job, which is all of us? And I don't have an answer to that question, but it is something we're going to be having to think about. Warner Brothers is up 10% right now, pre-market. I think they just said something. WBD, yeah, look at that go. That's up 8%. Warner Brothers said they are open to being acquired. Boom. There you go. They are open to being acquired. That is enough for Warner Brothers to get an 8% move. What was the company? I think it was Paramount, right? That was thinking of acquiring these guys. Warner Brothers has a lot of debt. They have like $70 billion in debt. So, they would be acquiring a lot of assets with HBO Max and all the different things they own, but they also have to deal with a ton of debt that they have. Isn't Amazon already using robots in some of their assembly lines of sorting packages? Yes. It's just not necessarily humanoid robotics that are like doing everything a normal human would do. Amazon still employs over 2 million people that literally do the things that you need a human to do. So, Amazon's been using robotics for the past 15 years. The question is, do they end up just replacing the whole human? And maybe that does happen sooner than later. Yeah, PSKY, that was the company that that merger between Paramount and Sky, potentially acquiring Warner Brothers. That would be a pretty big consolidation in the industry. That's Paramount Plus and HBO Max coming together. I actually do pay for HBO Max, even though I barely use it. I don't know why I pay for it, bro. I feel like I pay for it because they have The Dark Knight and Inception. And on the random day, I feel like watching The Dark Knight or Inception. Like, I really should cancel the subscription, bro. I don't pay for it. I don't watch it, so I don't know why I pay for it. But yeah, if that were to merge with Paramount, it would be quite incredible to see. Did Kathy sell SoFi? Yes, Kathy took some profits on SoFi yesterday. I have not bought SoFi, for those that are asking. I was going to buy it yesterday, and then the thing ran up 10%, and I was like, okay, I can't buy this anymore. But we'll see going into earnings if I buy some shares or sell some puts. But she sold some Oklo, 53,000 shares. She sold some Kratos. She sold some Palantir, sold some Shopify, sold some Roblox, and then sold some Palantir, Roblox, Shopify, and SoFi in the ARK F fund. She actually bought Klarna instead, which I don't get, bro. Selling SoFi to buy Klarna, I really don't get that. I think that's kind of weird, but that's what she ended up doing. And she took some profits there as well. So that's what you got with Kathy and SoFi. Is Beyond Meat still moving? I still don't know why it squeezed yesterday. Wow, it's up another 63%, dude. See, the theme of yesterday, and this is what I talked about on the market close, is that I was really happy that the S&P 500 is basically 0.5% away from all-time highs, which is super bullish. And the other reason that's super bullish is because a lot of the random frothy names like a QBTS in the quantum space or a Oklo were red yesterday. QBTS lost another 8%. It's down another 2% in the pre-markets. The stock is down over 20% over the past couple of weeks. And I was like, that's good, because there was no reason for it to run up to 50. So like Oklo down from 190, good. There was no reason for it to run up there. So the fact that it's staying down, Oklo down another 4%, and the S&P is going back to all-time highs, super bullish. But then you have this Beyond Meat stuff, and I'm like, well, I don't know how to explain now if that's necessarily bullish. I guess people decided they wanted to be vegan. It is heavily shorted, so that could be a headline as well. Is there a Walmart partnership today? I mean, that could definitely get the street excited. Beyond Meat, Walmart. Wow, it came out a minute ago. Wow, 2 minutes ago. Dude, I clicked on it right when it ran up, not seeing this headline. Beyond Meat expands distribution at Walmart. Okay, is that enough for it to go up 70% though? Like, I mean, I don't know, dude. I guess I know they are shorted, but do people even eat Beyond Meat anymore? Like this thing was like a fad with the Impossible Burgers and stuff. Like I don't know how people are that excited about it. I know this thing ran like crazy in 2021, but I guess Walmart distribution is enough to get people. Yeah, what does expand even mean? I'm sure they were already in Walmarts. I guess there's different Walmarts that they're going to. I don't know, bro. This stuff is weird. So look, I really liked that Oklo and the quantum stuff, all that stuff was red yesterday. And not because I want to see people lose money on those, but because even if you're down on those names, if you got in early, you are still up like crazy. And you yourself should not want those things to go straight to the moon if you want any chance for those stocks to actually stabilize in a range. Because the quicker they go to the moon, the quicker they come back down. So you should probably want a healthy retracement, which I think Oklo and D-Wave both did take yesterday, to normalize potentially the 30s instead of the 50s. And, D-Wave would still be up thousands of percent. But it would be a clown market if the S&P went back to 673 all-time highs and then Oklo goes back to 200. It's like, no, dude, like that's just too much liquidity. There's no real rotation. There's no broadening of the market. I know if Oklo goes to zero, it doesn't matter, but you just don't want to see all those names run up with the market because they're not being rewarded for anything. They're just being rewarded for excess liquidity. Now, AMD hitting all-time highs yesterday, super bullish. Apple, based on these iPhone 17 reports being way better than the iPhone 16, hitting all-time highs yesterday, super bullish. Apple still only up 8% year to date. These are things that are very, very healthy from my perspective. And it was really healthy to not see the Oklos of the world go to 200 yesterday. And so the question now is just going to be, do they stay at those levels or do they end up ramping back up? Mishaka says, I agree. I'm up 400% on QBTS, so I'm not greedy. Yeah, it's like, and yeah, maybe you're not up 6x anymore, but if the 6x results in being up 1x and going back to being up 4x results in at least staying up 4x, I think most people would rather say, I'd rather keep the gains I have versus go up into the moon, miss selling the top because everyone misses selling the top, and then have everything come crashing down. I feel like that is also more healthy for the broader market as well. Gold is coming down, folks. So we didn't talk too much about this commodity trade outside of when I mentioned it in the beginning of the show. If anyone has any theories on why you think it's coming down, I would love to see it in the chat. My theory is simply the trade got overcrowded. It got overcrowded. However, I say that with a grain of salt because, I mean, what if this is something that can reverse by tomorrow? Now, I know it's not a stock price and there's not that many headlines that we can look at that can easily get this thing to move up or down. Commodities are a totally different animal, but I do feel like the trade at some point after an 11-year breakout probably got a bit overcrowded, at least for now. And maybe because of that overcrowding, you're seeing some weakness. I mean, take a look at this headline right here. India's biggest refinery yesterday ran out of silver for the first time as demand exploded. Now, Diwali was probably a part of this, as a lot of the elements in silver and gold are used in a variety of different things that are made for Diwali. But the fact that there's this much demand across the world for global silver, and the global silver supply has lagged behind demand for 5 straight years, now that it's starting to flip, it's quite incredible to see how much excitement there is in this trade. And the question is, will that excitement continue to last? Daniel says, taking a breather. Moves have been too big. Fandango says overextended. Kel says everything is down right now on that. Green Bull says gold will be 15K in 2 years. We looked at the central bank chart yesterday that showed so many central banks are starting to buy massive, massive amounts of gold. Even Poland, Kazakhstan, Turkey, they're all buying as much gold as you can imagine. And so, yeah, I mean, it is one of those things that's becoming an asset class that a lot of these central banks are liking, probably even more than treasuries. Speaking of treasuries, the US 10-year pre-markets, wow, 3.95. We closed below 4 yesterday. We open below 4 once again today. You know, it really doesn't make sense for gold to be going higher and for the 10-year to be going lower. But if gold starts going lower, maybe that starts to make more sense in terms of how these two macro dynamics should be playing out. Gold is becoming very liquid, and maybe all that liquidity is also a reason why, you know, some people might be taking advantage of it as well. So you got the 10-year potentially coming down. Countries are FOMOing into gold. That could also be happening. Countries could be FOMOing into it even more than individual investors. We looked at this on the market close yesterday. Take a look at this. The term AI bubble on Google Trends has 5 to 8x the search volume of the following terms: how to buy Bitcoin, Ethereum, how to buy Nvidia, stock market, how to buy stocks. This was fascinating to look at yesterday because more people are searching for if we're in an AI bubble than what you would expect people to be searching for if we were at the top of that bubble. People would be searching for how to buy stocks, how to buy Nvidia, Bitcoin, Ethereum, like the stock market. Like these are the terms that would be trending. And in fact, it's AI bubble. So to me, I think this is actually not toppy. I think this is more so a signal of we've got a lot of room to grow if the majority of people are concerned about being in a bubble versus being concerned about, you know, the things that you would search for in a bubble, like how to buy Bitcoin. I mean, the fact that Bitcoin is not even near its 2017 levels in terms of search volume just goes to show retail's just not interested right now. And I don't know if you can easily have a bubble if retail is not massively interested in the context of crypto. Here's another stat that was important yesterday. Goldman Sachs says its basket of most shorted stocks is up 16% in October, on pace for its best month record since 2008, far outpacing the S&P 500. At the same time, Goldman's unprofitable tech basket, which includes names like Roku and Peloton, has also surged 16%, the strongest since October 2014. So this is kind of why you're seeing some of the names like a Beyond Meat get these massive moves. You do have shorted names that are on a percentage basis much more shorted than, you know, your average tech stock, have a pretty strong October, which also aids to the volatility that we've seen in October. October is the most volatile month on record. And the fact that some of these shorted names are getting the moves that they're getting continues to prove how volatile this month ultimately is in a lot of levels. Yeah, profits are coming from somewhere else. 100%. Profits are coming from so many different areas as well, which is a whole different way that this is playing out. So that's what we got in the context of some of this macro news and what is going on as we get to the end of October. Here is Karpathy, one of the former guys at Tesla, talking a little bit more about some of the AI progress we're seeing right now.
Overall, the models are they're not there, and I kind of feel like the industry it's making too big of a jump, and it's trying to pretend like this is amazing, and it's not. It's slop, and I think they're not coming to terms with it. Overall, the models are they're not there, and I kind of feel like
So you got Karpathy basically saying, hey, a lot of this shit is stupid. And I was talking about this yesterday. I mean, I'm starting to agree with him as well. Like, I downloaded Sora, I used it a little bit, and I'm like, I'm never going to use this again, bro. I don't want to see this random AI generated content. Like, it really is stupid. And so when Karpathy, who, you know, used to work on FSD, he was one of the head guys on FSD and is, you know, using AI to like really make a change in the world, is seeing that these models that are producing the type of content they're producing that are using all this GPU data center capacity for what exactly? To like make a picture of a cat jumping over a birthday cake? Like it's weird. And so maybe I'm not the target market, maybe I'm not the demographic, but I wonder how many people in the world actually want to sit and consume all that content. And if that's the real resources that people should be focusing on when it comes to AI. And, you know, maybe it's not going to be what people care about. Speaking of brain rot content, I made this post yesterday that resonated with a lot of people. I wonder how much it resonates with everybody here. But I said, I wish Instagram Reels ran on AWS. Because maybe just for one day, I wouldn't get sent all the stupid reels that I have to pretend to click on in these group chats and then respond to them every day. Because at this point in my life, as someone who's about to turn 28, I've just told people that if you send me a reel, I will not watch it. I have zero sympathy for not watching it. I will actively tell you after you send me the reel that I'm not clicking on it in hopes of you one day deciding to never send me a reel again. Ironically, it just makes my friends want to spam me with more reels. So I'm putting my foot down in a lot of these group chats, bro. I'm really putting my foot down and I'm just telling them, dude, I'm not clicking on this. I don't care if it's 10 seconds. I don't have the patience to listen to this, to watch whatever thing that gave you a little bit of a giggle during the middle of your day for 10 seconds. I'm not watching it. I'm just not. And if it's more than 10 seconds, I mean, you're out of your mind, dude. I'm not waiting through 30 seconds of watching some stupid reel. So I'm done. I'm totally done. I am moving on with my life and I'm telling people I'm not watching it. Having said that, I made a new Instagram, so follow me on Instagram. So I'm on Instagram. I told you guys I was going to start one anyway. I feel like I should probably start posting on this platform and build up Instagram. So if you want to follow me there, you can follow me there. There's no guarantee I'm even ever going to be posting on this. I just feel like I probably should be posting on Instagram because it's been 10 years and I haven't actually made an Instagram. So if you want to follow me there, I will not send you reels. I will also not click on your reels if you send it to me. But I kind of want to use this as a way to show more of a behind the scenes of my actual life. I just don't know if I actually will do that. Maybe in 2026, but there it is. Instagram's out. So if anyone wants to follow me, you can follow me there. It looks like a fake account. Dude, it looks like such a fake account. A Mitt Cook Rage at 227. It looks so stupid. It looks like a fake account. But every other username was taken. So I was like, okay, I'm just going to put my first and last name with those numbers there. And that's what you just want us to watch your reels. I don't even think I'm ever going to make reels. I want to capture some moments in life, right? Because, I was actually scrolling, here. Okay. I'll talk more about this later, but I was scrolling through Facebook the other day and I was like, dude, there's a lot of memories on Facebook, but I don't use Facebook anymore. I still scroll through Instagram, occasionally for a couple minutes a day. I was like, it'd be nice to just capture some memories on a platform that I can go back to. Realistically, I'm like, I should be documenting the journey of life on a platform that I actually use. Because on Facebook, I'm trying to find these memories from 10 years ago. I'm like, dude, I don't even use Facebook anymore. I don't know how to use this. So I feel like from that perspective, it's not the worst idea to start posting on IG. All right, here we go, folks. Thank you, everybody, for being here. It is Tuesday, October 21st, 9:30 a.m., and the stock market is once again open. All right, wake your ass up. Let's see if we can hold on to this green momentum that we had yesterday. S&P 500 flat on the day. Looks like it's about to go red. We do have a bit of a red candle right there. 671.34. We did close above 671 yesterday. Tesla goes red. Palantir slightly red. Robinhood down 1%. It did hit 137 yesterday. Grab down 0.5%. Google down 1%. SoFi down 0.5%. 28.50 from 28.90 to 28.50. AMD down 0.5% as well. Reddit's up 1.4%. Amazon is holding on to a 1% move. Amazon literally did not go red at all yesterday outside of the pre-markets, and then it bounced up green even after the AWS outage, which literally affected half the internet. But Amazon holding on. I put the green or red poll in the chat, so you can vote on what you think we end up for the day. Amazon right there trying to go for 219. Meta, that's up 0.5%. Salesforce up 1%. Alpha's up 1.23%. How about Galaxy, which crushed earnings? These guys are up 7%. They were up 12%, so they're losing some of their steam. Coca-Cola was up 3%. Coca-Cola holding on to that 3%. GM was up 11%. GM right there is up 8%, so giving back a little bit of those gains. SMCI, there was the rumor yesterday that they're partnering with XAI. We have no updates on if that rumor is true, but that was the rumor that got this thing to pop up 7% yesterday. Bitcoin, 108, loses 109. Ethereum, 3,800. That means Bitmine's probably at 52. Bitmine, 52.54. That's down 2.3%. The NASDAQ's down. CrowdStrike's down. Coinbase is down. HIMS, 87 cents away from losing 50. MicroStrategy, that's down 1%. Palo Alto up a little bit. And then ASTS losing 100 from last week, losing 85 from yesterday, now at 81. Still up a chunk from 65. But down on the day. Square, that's down. Intel was up 4%. That's down. Archer was up yesterday. That's down another 2%. TFC's up a little bit. Palantir goes down. Robinhood loses 134, now back below 134. SoFi slightly goes green by about a cent, trying to hold on, but still red. Tesla right here, 446. That one is basically flat. on the day as well. Now, Apple hit 264 yesterday, hit all-time highs. And I think the iPhone 17 growth likely means they deserve it. But 262 right here, trying to hold on at least to the 260s. Where are the Bitcoin miners? Iran, wow, 56. Iran losing that 58 level that it held on to yesterday. 56.95 on Iran. A lot of these Bitcoin miners, where's Bitfarms? Oh my. Bitfarms actually took the biggest beating, I think, over the last week. Bitfarms was at, let me do the math right now. Bitfarms is down 30%. 30% in the past week. I know they did an offering, and for a day, it seemed like the offering didn't matter, but then the next day, the offering kind of hit them. Wolf's down 2%, Hive's down 2%, CleanSpark down 1%, Cypher down 3%, Iren down 3%, Riot down 1%. Galaxy is the only one that's up because they had a good earnings, which is helping them. Wow, Amazon 220. Look at that. Look at that. In the face of the AWS outage, Amazon is the one that holds on and continues to go green, which is pretty incredible to see. So Amazon holding on, the rest of these companies going down. How about the rare earth companies? They are all down on the day. LAC down 2, TMQ down 5, MP down 3, CRML down 9, USAR down 9. It looks like whatever momentum the rare earth companies had starting from 3 weeks ago, at least over the past 4 days, has died down. And maybe this is not a structural die down of the momentum. Maybe it's them taking a breather. Same thing with silver. Maybe silver is just taking a breather. Maybe it's not structural. But if it's structural, it's not easy to regain that momentum. It really isn't, especially if momentum was the only reason that they were running in the first place. So we're going to see. We're going to have to see how this one ends up playing out. What about Oracle, which got whacked yesterday? Oracle down another 1%. Does anyone have the headline for why Oracle got hit yesterday? I could not find why Oracle was down 5%. I did not see a legitimate reason for what was happening. Nebius, I did sell a put on Nebius at 98. Maybe I get a sign. Who knows? It's at 105, 140 to 105. It has taken a pretty big beating from those all-time highs, but I did sell a put for 98. So if it gets below 98, I probably will get that assignment. Beyond Meat, what do we have there? That's up 61% based on the announcement with Walmart, which I don't know if is enough to warrant a 60% move, but that's up. GSIT, this was the company that put out a white paper yesterday. They're up another 30%. They were up 200% yesterday, and this white paper had to do with GPUs that don't have to use energy as intensively as Nvidia's GPUs do. No revenue, no earnings, no distribution deals, just a white paper, and that's why that stock continues to go green. Raytheon, that's up as well. Again, they had a great earnings. Raytheon, wow, 9% for Raytheon. I didn't look I mean, they beat on the top and the bottom, but I guess they said something in the call or via guidance that really is getting the street excited. Defense contractors don't move 9% that easily. So you would imagine Lockheed Martin probably will have a strong earnings. That one's down 2% right now on the day. Why is Nebius being hit so hard? You know, Nebius is because I bet you, all right, so Nebius is down 3%. I bet you CoreWeave is down at least 2%. CoreWeave down 3.5%. Nebius, CoreWeave, Iren, all these companies, if you're investing in them, you've got to remember they're in the same bucket from a narrative perspective. Just like Robinhood, Coinbase, et cetera, are in the same bucket from a crypto perspective. So, I mean, I don't know if there's any justified reason for why Nebius is getting hit, especially after Roman announced a new data center that they were building yesterday in Israel. But it's down 2%. And it's down, 15% over the past week, I think, because all the data center plays are taking a hit. Same thing with CoreWeave. CoreWeave announced multiple partnerships over the past week, not to mention the $14 billion partnership with Meta. Does that deserve to go down from 150 to 120? I don't know, but all the data centers get hit at the same time if they do get hit. If you are in this trade, you are in the trade with all the other stocks as well. That doesn't mean they're going to proportionally trade 1-to-1 every single day together, but you're likely in the same trade together in regards to how the bucket of stocks perform. I think the only kind of way you get out of that bucket is if you buy one of the hyperscalers, because they have different deals, like not exactly a hyperscaler, but one of the larger companies, right? An AMD, an Nvidia, an Oracle. They kind of trade on their own merits because they're multi-$100 billion, if not multi-trillion-dollar companies. But Nebius is a $30 billion company. Galaxy is a $60 billion company. Iren's a $20 billion. So all these names, they are much more volatile and probably in buckets with these algos that end up getting traded together. SMCI goes green. Okay, SMCI is up. TLT is also up. TLT, look, if people hedged with TLT, you are doing pretty decent on it. I think TLT a couple months ago was back at 83. It's at 92 as the 10-year comes down. So for those that bought TLT as their hedge, look at that. The 10-year at 3.955. Lowest since April, folks. Lowest since April. And that's why you are getting some momentum. Why is Oklo tanking? I don't know, but it is good to see. Look at that. 7% down, baby. I don't want to be super excited for that, but I'm super excited for that. You need the froth to leave the market. You need it. We cannot have a healthy bull market with stupid stocks running up. D-Wave down another 4%, baby. You need the froth to leave. We cannot have nonsense companies running for no reason. That's not indicative of any level of longevity in regards to this bull run. It's just not possible. Every time that's happened, we end up topping out. And so I think this is really bullish to see the S&P $2 away from all-time highs and Oklo $40 away from its all-time highs, potentially never even getting back to those all-time highs, because why the hell should it? Someone tell me why it deserves to be worth $40 billion. I mean, like, and if there is no reason, then it shouldn't get back there, and that's a good thing. That is a good thing to see. That's important. Wow, Netflix is reportedly one of the companies looking to acquire Warner Brothers Discovery. Huh. Warner Brothers up 10%. Market cap is $50 billion. Dude, if Netflix bought Warner Brothers, I wouldn't be that upset about that. How much cash does Netflix have? How much cash does Netflix have? Okay, Netflix has $8 billion in cash. Warner Brothers is worth $50 billion as of its move today. I don't know exactly how they would finance this, but they would get a lot of good content. Friends would come back to Netflix. I mean, that would be bullish. All those films on HBO Max, Silicon Valley, these shows, like, these are really good pieces of content. Are they worth $50 billion? I don't know, but Netflix also now has advertising. So, you know, worst case scenario, they can put a ton of ads in a lot of these shows that they know people will watch, even if they don't gain new subscribers. I mean, there's a lot of different ways this plays out. Comcast is another one to bid for Warner Brothers. That makes more sense to me because Comcast and Warner Brothers have had a pretty close relationship over the past 20 years. Netflix would be the outsider, but I wouldn't hate that. You're buying the IP, essentially. Yeah, you're buying the IP. They would get DC Studios. Yeah, there's a lot of assets that HBO Max has. A lot of stuff. And I'm just looking at some of the stuff they own. Yeah, TNT, that'd be massive. Wouldn't they get basketball? Doesn't TNT still have a contract with the NBA, I think? Like, they might get live sports, Cartoon Network, Animal Planet, Food Network, the Science Channel, CNN. Which, you know, even if everyone doesn't watch CNN, there's a certain part of the population that does care about that type of news. You're going to get those subscribers. I mean, there's a decent amount of stuff that they own. Comedy Central, Crunchyroll. There's a ton of things that Warner Brothers owns that Netflix could get from an asset class. Batman, yep, that's a big one. TNT contract is over. Okay, so they won't get the NBA. But there are some pretty good assets here. HIMS down 1.25%. ASTS down 1.85%. MicroStrategy down 1% on the day. Where is Rigetti? Wow, 3% down on Rigetti. How about IONQ? IONQ down 2%. IONQ has been the most resilient in all the quantum names. Rigetti and D-Wave have just fallen off like a rock. But IONQ has actually held up strong compared to them. But you are seeing those names just get hit. And then an Oklo right here down 7%. On the day, SMR down 7%, and then Nano Nuclear down 5%. Galaxy is not fading because their earnings are pretty good, but all their competitors are massively red today. Wow, I ran 6% down, 70 to 55. Cypher down 4, CleanSpark down 4. CleanSpark was up 20% yesterday. Marathon down 1. Bitfarms just keeps going to the gutter, 462. And then Riot down 1%. Again, all of these names are still up multiple hundreds of percent over the past year. Iran, CleanSpark, Cypher, etc. So it's I mean, yeah, they're taking a breather. They should be taking a breather. And also they should have to they should be forced to do what Galaxy did, aka put up massive earnings for them to get a premium. All these companies, including the Oklos and the Quantum, that's the other thing. Like, D-Wave should put up some really good earnings to get its premium. D-Wave now down 7%. They don't put up good earnings. there's no real growth. So like, why is it like Big Bear AI? They should be forced in the age of AI. If you're going to put the ticker symbol AI in your ticker, or the letters in your ticker, you should be forced to put up good earnings. These companies have gone parabolic and they haven't put up anything other than a narrative. It's like, I think this is so healthy, bro. This is so healthy. And by the way, I'm not being biased to any of these companies because I say the exact same thing with Robinhood. Robinhood should be forced to show that Q3 was phenomenal to get back to 150. They shouldn't just get to 150 off hopes and dreams. Like, a lot of this stuff needs to be earned. And, you know, the best companies that deserve it will earn it. But the ones that don't, they should not be running up for no reason. Nvidia right there, 181.41. That also goes red. Grab right there, 561. Grab's going to have to put up good earnings to get back into the sixes. Although I do think Grab is getting manipulated. I mean, it stayed at 6 for a month and now it's back down below 6 for no reason. So to me, I think the shorts are more in control there, but they're going to have to put up good earnings to justify that they deserve to be there. Apple right there, that one is green, up 0.81% on the day. It shows a rotation out of risk. Exactly. It shows a rotation out of risk, which is very, very healthy, I feel, when the S&P is trying to get back to all-time highs. GM, they put up a great earnings today. They deserve it. GM put up a great earnings. You know, I don't invest in GM, but you can't deny a 30% EPS beat. It's up 26% now year to date, 12% today, based on some good numbers. Are you going to cover the Federal Reserve crypto meeting today? So thank you for that comment, because yes, I will be covering it. I don't know if it's going to be live streamed, but there will be a meeting today. And this is actually really important. So take a look at this. You're going to have a panel around stablecoin use cases and tokenized products. The COO of BlackRock will be in the tokenized product panel. Kathy Wood is going to be there for another panel. And then the Circle president is going to be there for the stablecoin panel. I think that, and then the Chainlink founder is going to be there for another panel. I think this is super bullish because the fact that the Federal Reserve, one of the entities that's been the most dogmatic around crypto over the past essentially decade, is hosting multiple panels in one day around different crypto ideas like stablecoins and tokenization. I feel like that's super bullish crypto just as an industry, even if, you know, Bitcoin and Ethereum have been flat over the past couple of weeks. So it is good to see that, and hopefully we get some updates from that, and then I'll report about it on the market close. BitMine right there, 52.16. That is down 3% on the day. We're losing money. Stop saying healthy. Okay, hold on. If you're losing money in Oklo and you bought it at 190, I'm sorry, but that is very healthy to not see the froth in Oklo. Now, if you bought it at 190, it sucks for you. Like, just if we're going to be honest, but that does not mean it is not healthy to see Oklo come down. If you bought Robinhood at 150, it sucks you bought it at 150, but it does not mean that it's not healthy to see Robinhood come back to reality, because it probably didn't deserve to be at 150. Like, dude, there is no way one can say that this is not healthy. This is the most healthy you could possibly imagine. Grab has $7 billion in cash, growing 25% year over year. When Grab goes down, that seems more like, okay, the shorts are involved. There's manipulation. There could be something going on. Maybe there's some narrative that we might not know about, but that is a company with a healthy balance sheet that is profitable and growing. Oklo's up 2,000% this year, has no cash, no earnings, no revenue, no contracts. They just have a narrative. So it's not healthy to see stocks with a large pile of cash and actual earnings go down. It is very healthy to see nonsense come back down to reality. It's just that simple. Like, this is the nature of how the stock market operates when stupid companies go to the moon. And I'm not saying it's stupid in a sense that they can't ever have potential or they can't get a bunch of contracts, but the stock price action was stupid. Like, let's just be honest about it. It does not make sense. There's no way to justify it, quantitatively or qualitatively. The only qualitative argument you can make is nuclear energy is important. Okay, how long does it take to set up a small modular reactor? 5 years, 10 years? How many has Oklo set up? How much revenue have they potentially even had in their backlog to generate from that? Like, it's not even picking on Oklo. It's Oklo as a metaphor for all these companies that ran up for no reason. It doesn't make sense. It does not. Amazon pumping today, it makes way more sense than an Oklo getting back to 190. Amazon right there, 220. That's green on the day. Yeah, it always comes back to fundamentals. Pouncer is an exception because you like it. Pouncer is not an exception because I like it. I have said, I mean, if you've been actually watching the channel for the past 4 years, especially since Pouncer started making its run in 2024, I was the first person to say Pouncer is getting ridiculously expensive. However, the one thing Pouncer is doing that Oklo or D-Wave or any of this other crap is not doing is growing 50% with 60% free cash flow margins and 45% adjusted operating margins. You can disagree with the multiple on the stock. You can't disagree that they probably don't deserve a multiple because of their growth. Same thing with Hood. Same thing with a lot of other companies that, and does Oracle really deserve to be worth 800 billion? Maybe not, but Oracle is growing like crazy in terms of how they're a massive hyperscaler in the age of cloud computing for AI. These other companies have nothing. You can disagree with the multiple on some of these stocks. You cannot compare them to companies that have nothing other than a name and a retail audience that is pumping them up. Like, that is the difference. Does Apple deserve a 35 PE? Probably not. Apple's growing like 3% year over year, but Apple's also buying back $100 billion worth of stock. Apple is also going through an upgrade cycle with iPhone 17, and Siri might end up becoming one of the biggest AI consumer products next year, which is why those are substantive things you could say probably deserves a multiple. You can disagree. Maybe it should be 27 instead of 35, but disagreeing on a multiple is different from saying that Apple doesn't deserve any premium. A lot of these other companies probably don't deserve any premium because there's nothing there. And it's good for that to be wiped out. It's really, really important for that to be wiped out. He's being moody today. No, I'm just like, bro, I want to keep this bull market going. I want to keep it going. Nebius, by the way, 104. It looks like I might get assigned on my 98 puts. And to keep this bull market going, you cannot have these stocks go to the moon. Like, you just can't. It starts to look like a bubble when a lot of these stocks go to the moon for no reason. And the best way to hedge against that is for those stocks to die out. It's important. It's very, very, very important. Amit sounds like an ex-wife. Yes, it'll sound like an ex-wife. And I'm not even trying to offend people that are in these names. I feel like if you're in these names, you should know that these, like, again, I don't know how many times I have to say it. I'm in Robinhood heavily, and I know it doesn't deserve 150. Am I happy it gets there? Sure. Am I crying that it's not there anymore? Absolutely not. Because I didn't buy 150. Because I had enough level of reasonability to say, hey, it probably doesn't deserve to just go to the moon for no reason, even if it got into the S&P. And then B, it's like the stock is up 230%, even if it's down from 150. Oklo, if we look at its year to date, is still up 575%, and they have not grown anywhere near like how Robinhood's grown, even though it's down from 190. Like, this is my point. It's like it takes a $40 drop and it's still up 5x, which means it could take another 30, 40% drop. It would still be up 2x, and like no one could be that upset about it. Or at least if you own it, you shouldn't be that upset about it because you probably know it might not have deserved to be up 10x in the first place. Yeah, it's only up 500%. That's my point. It's not to pick on any of these companies. Like, I'm not trying to be biased to any of them. I'm just saying, like, froth is froth. You either understand froth or you don't understand froth. And if Oklo's not froth to you, then I don't know what is froth. AppLovin right here, 5. Like, does AppLovin deserve to be down from 800? Maybe it deserves to be down. Does it deserve to be down as aggressively as it's down? No, but they have a narrative around the SEC probing them for advertising. And as a result, this one's getting hit. Oklo has a narrative around nuclear energy that has not manifested in anything real. This AppLovin thing is probably going to go away in a couple months, but AppLovin's getting hurt worse than Oklo. How does that make sense? It really doesn't fully make sense right here. Google 253, that's down from 255. S&P going red on the day, but still holding 670 for what we have right now. Would you like Grab below 550? Yeah, I mean, look, I like Grab right here as well. There's not much I can say for why Grab is down from 630 other than because there's no narrative. If anyone has a headline, I would love to see the headline. And this is why I'm saying it's chalking it up to shorts and manipulation. And the data that we have on that is the short float went from 5.7% to 8.3% in the past 2 weeks. We talked about this 2 days ago. So all I can say is Grab reminds me of SoFi right now when it was stuck at $6-7 and the shorts just could not believe that, SoFi was ever going to grow. So they kept shorting it. Guess what? Noto put up the good earnings. The shorts got the hell out and then the stock moved higher. I think that could be the same trajectory. But I don't have a fundamental narrative for why it deserved to lose 650 when it was trading there for about a month. But that's different from like an Oklo or a D-Wave, right? It's just different from some of these other stocks that ran up thousands of percent, one could argue, for no reason. And now they're taking a bit of a breather. And by the way, Oklo might not ever get back down to $10, $20. It might normalize in the 100s, which again would still keep it up 300-400% for the year, but it just might not get back to 195, which again, I just don't think anyone can meaningfully complain about. Also, Grab has 84% institutional ownership. Oklo does not. Like this, look at where the smart money is going. Sometimes the stock price action is not indicative of where the smart money is loading up on. And those are things you have to see through versus companies that have nothing going for them in regards to smart money or institutional ownership, because there is no real institutional ownership because the institutions don't care. And that is a fundamental difference. Roblox right there, down 1% of the day, and then the Qs down 0.13% on the day as well. Let's see if we get any macro data. Let me also pull up the heat map here. It's definitely a red day for what we're seeing. Actually, well, it's red, but it's also green. It's just a very small green. Apple's up, Amazon's up, Meta's up, Berkshire's up, Lilly's up. Consumer defensives are down, industrials are green, Microsoft's up, Oracle's down. So it's a mix of green and red. Google's getting hit the worst in the Mag 7. Then Amazon's getting the most, up 1.4%. People shouldn't be down that much today, but they probably aren't up a ton as well. Wow, Apple new all-time highs. Yep, look at Apple. 264.84. It hit 265 a second ago. It just got the Wall Street Journal notification. Warner Brothers Discovery says it's exploring a potential sale of all or some of its media holdings, which include HBO and CNN. That is wild, bro. Warner Brothers has been around for a long time. The fact that they're basically saying HBO Max failed. That's basically what they're saying. They're basically saying they weren't able to compete in the streaming era, which, like, yeah, it's not easy to compete in the streaming era. And HBO Max has some really good content, but still, Warner Brothers was a media company. They decided to become a tech company with the streaming platform, and it's not easy to compete with technology. It's not easy to compete with Apple Plus and Netflix, and like that's a whole different ballgame. Also, CNN Plus ruthlessly failed. I mean, that thing lasted for literally 5 days before they shut it down. So that one also did not give them a lot of momentum. Iran right there down 5% of the day, continues to go down. Baba's down 3%. The VIX actually up 2.8. So you got the VIX moving higher. Still below 20, which is good to see. But the VIX is up. The final season of Game of Thrones literally killed HBO. Agreed. And I didn't even watch Game of Thrones, but from all my friends that I heard about, they could not stand the ending of Game of Thrones. So maybe that was the nail in the coffin. Why is Google down? Google is not Oklo. Okay, so again, like we cannot make these types of comparisons. Google is Google, and Google will go up, Google will go down. It's a stock. A stock will go up, a stock will go down. The difference between Google and Oklo, outside of a couple $1 trillion in market cap, is that Google does $100 billion in profit every year. Oklo does nothing. So when I say Oklo's not getting back to all-time highs, there's a difference. Oklo now down 8% on the day. Google will probably continue to grow over the next decade, and they will probably be more valuable than what they are today. And Google itself had a narrative issue for 9 months this year that it just broke out of 3 weeks ago. Oklo might be able to grow over the next 10 years if they actually end up putting up the earnings results. But as of now, none of that's there, and they're getting a massive premium for no reason. That's my point. That's the point. It's not about comparing stocks that are red on the day. It's about the velocity at which one went to the moon and then came back down, and another one that is down 1% but is up from 150 because they don't have to worry about the DOJ anymore. It's completely different sectors, different names, but different opportunities to understand across the board. Yeah, I see. This is the problem. I don't want to have to explain the difference between Google and Oklo. And this goes back to the conversation I was having a couple days ago. This is what made me scared on Technical Tuesday last week. We had a lot of people in the chat asking for these penny stocks and TA on all these random OTC companies. And I'm like, oh, this is not a good sign. This is too many people are trying to find the next shiny object. And now having to explain the difference between Google and Oklo continues to reinforce that point, that there is froth in the system. That froth is not indicative of a market top, in my opinion, because that froth could go to zero and Nvidia will be fine. But it's not good in any sense of the imagination objectively to have that froth if we're trying to get to the next leg up on the S&P. We should have good quality companies join the rally and diversify in the rally, not your random run-of-the-mill narrative on an OTC that someone saw on Twitter and that now is going crazy because they bought 10,000 shares because it's $2 and they think it's going to go to $5. It's just not healthy. And maybe in 2020, when I was 5 years ago and I was a much more naive investor, I would have said, oh, yeah, that's awesome. And now I'm just like, no, this is stupid. This is stupid. Objectively, it's stupid. We need to call it what it is. And we need to make sure that shit does not permeate across the market. It's just, I've lost a ton of money betting on those names back in 2020. Like, it's, you go through the hard lessons of losing money and then you realize, oh, that stuff is stupid. And you try not to lose money anymore. But having it come back is not the best thing that we want to see. Nebius right here also getting wrecked, 104.71. It did hit 102. I don't know if this one wants to go below 100, but 104.54. Nebius, by the way, even after this decline from 140 to 104, is still up 240% year to date. And Nebius is not a meme stock. Nebius is a legit company with legit earnings, legit revenue, quite frankly, a fantastic revenue growth rate after that Microsoft news. So, no one should be complaining that Nebius is down from 140. It's still up more than 2.5x for the year. But when people complain about that stuff, it goes to show how much greed is really in the markets, and that stuff needs to get wiped out. It just has to get wiped out. ETHZilla did a reverse split, and that's why ETHZ is down 12% on the day. Reverse splits, I mean, that's another function of these stocks getting overhyped. I've been in stocks that do a reverse split, and then, you go from 10,000 shares to 100 shares. And the share price goes up in order for it to continue being listed on the NASDAQ, because you have to be above a certain price. But your actual shares go down. Your ownership in the percentage company stays the same. But the stock usually sells off after a reverse split because no one wants to be part of a company that can't even keep their share price above. I mean, this is what almost happened to Opendoor at 50 cents. You need to be above $1 to be listed. And then Eric Jackson came in and kind of started that movement that changed the narrative with Opendoor, but they were about to go through a reverse split just to stay listed. So companies that don't have a massive retail movement like an Opendoor, they're going to have to end up taking that reverse split because there's no other option. They have to stay listed on the NASDAQ or on the New York Stock Exchange. But we are relatively seeing a red day. Gold is still, wow, gold loses 42. We were at freaking 42 during the pre-market. Look at that, 41.80. So gold is actually officially getting hit today. Silver, are we below 49? Wow, silver, hold on. 12 cents away from 49. 12 cents away from losing 49, and then you get to the 48s. And we see what goes down from there. Silver down 6%, grab now down 4%, and gold down 4.2% as well. Oscar announced a partnership with OpenAI yesterday. That's why Oscar's running. Looks like they're going to be incorporating more agents into their healthcare facilities. So Oscar right there, that's up 3.2% on the day. I think it's a good partnership. The real thing that matters about Oscar is when this shutdown is going to end. And so far, we don't really have updates on it. Mike Johnson, he was live this morning, and basically he said, he said the same thing, right? He said it's a Schumer shutdown. He said the Democrats are to blame. I mean, they every time they go live, they say the same thing. They just blame each other. So I don't know if we're going to get any capitulation. You did have Hassett yesterday say by the end of this week, there might be some type of a deal. We're going to have to see if that ends up playing out. But as of now, we don't have any remedy for this shutdown yet. Chell says this is why you shouldn't FOMO. I agree. This is also why you shouldn't FOMO. This is what Mike Johnson said about 20 minutes ago on this shutdown. Was that muted? Was that muted? Oops, that was muted. My bad. All right, it's back. Was that muted?
Is so clear. Remember, it was over a month ago that the House did our job and we passed a clean continuing resolution, a totally nonpartisan 24-page, very simple piece of legislation to just keep the lights on so that Congress could continue to do the work of appropriating the funds for the annual budget and also for navigating all the rest of the issues we have on the table throughout the end of the year. The Democrats voted it down. They've done it now almost a dozen times, as you said. because they're playing partisan games. They filed a counter proposal. Let's not let anybody forget what they filed as their counter offer. Their CR is not a clean one, it's a dirty one, because they want to spend $1.5 trillion new dollars on all sorts of wasteful programs, including $200 billion to fund health care benefits on the backs of American taxpayers for illegal aliens. They want to give $500 million back to the Corporation for Public Broadcasting to prop up leftist news organizations. And they want to spend billions of dollars overseas on all sorts of extraneous, crazy kinds of programs.
Day 21 of the shutdown, and on the 21st day, what is Johnson doing? He continues to point the fingers at Democrats, and the Democrats are pointing the fingers at the Republicans. I mean, again, I don't know what gets them to the table. The other quote that Hassett had yesterday was that if the shutdown doesn't happen, the government will look into more strategic options to get the Democrats to the table. I don't know what that means. I don't know how, if they don't negotiate on healthcare, which is the biggest linchpin of getting the shutdown to be resolved. I don't know what else they're going to focus on, but it just doesn't look like they're easily getting to resolve things. And as a result, we will continue to be shut down until this ends up fixing up. So that's what we have on the shutdown. Caliber says, Amit, you can still be honest and truthful about these energy stocks without being an ass about it. I don't think I'm being an ass about it, dude. If being an ass, if saying Oklo is up 5x even after it's down $40 and it probably doesn't deserve to be 193 is being an ass, then okay, I guess I'm an ass. If someone gets offended by saying Oklo is up 500% and probably doesn't deserve to go up another 30%, even after it's up 500% on no revenue and no earnings, then I guess that's the new definition of an asshole these days. I don't know. But like, this is also, there's not saying, hey, AMD deserves to go to shit. It's not saying Google deserves to go. It's saying a company with no revenue, no earnings doesn't deserve to be up 6,000%. I think that's actually being a little bit more responsible around thinking of some of these names in a bull market that I want to see continue. My life is more fun if the bull market continues. But it's not going to be fun if we say, oh, look, Oklo is going to the moon. Like, that's not fun. And it's not fun because even if I owned Oklo, I know that that's not sustainable. Like, it's just not. Every market has not had the ability to sustain stupid names going up on nothing other than narratives. And by the way, Palantir was a narrative stock for a long time. Guess what happened in the early 2024? They put up the growth. I mean, the Palantir would have been a narrative stock for the past couple of years if they had not pivoted in 2024 and actually started growing upwards of 30%, now at 50%. But they put up the growth, and the growth changed everything. So if Oklo puts up the growth, the narrative changes everything. Like, you start to get something substantial. If D-Wave puts up the growth, the narrative changes it. But like, these companies aren't putting up any growth. There's nothing. It's vaporware. It's just excitement. And if you're in these stocks, you have to understand that as well. And if that it gets you offended, then I don't know what to say. I'm not shorting them. I don't have an agenda. I don't have puts on these things. I don't have an agenda to make them come down. I just want to be more reasonable about the health of this bull market. Because if we lose momentum across the actual stocks that matter, then you can kiss Oklo goodbye. If Nvidia falls 20%, yeah, like that, then you're really done. But the only way for Nvidia to not fall 20% is for the health of the bull market to actually be sustainable enough where a stock like Oklo can still be up 5x, even 2x if it falls another 30%. Without earnings. And I think that's the most important thing to try to figure this out. Amit is flushing out all the froth by himself. Oh my gosh. To Amit's point, Oklo can't even produce energy until at least 2030. Yeah, dude, what are we talking about? What are we talking about? I don't care if the Secretary of Energy knows the brothers on the board of directors. Like, all this stuff is nonsense. Like, where's the actual growth? Where's the actual earnings? Until we get that, we cannot be championing these names. It's just that simple. It's just that simple. Where's BM&R? What do we have on BM&R? And again, I know some people think that BM&R is similar to that category, but I think that misses the point of understanding Ethereum. You can hate a digital asset treasury. That's fine. You don't have to like the concept of a DAT. But to have beef with BM&R, you need to have much more sophisticated beef with Ethereum. And Ethereum, I mean, we've covered the story pretty extensively over the past couple of weeks, really the past couple of months, ever since these DATs started getting excited. Ethereum's showing real growth. Stablecoin supply is 300 billion. 62% of that stablecoin supply, which basically wasn't even an industry 10 years ago, is on Ethereum. Tokenization across the board, BlackRock, Robinhood, PayPal, all these companies are using layer 2s on Ethereum. So this is not something where, yeah, the price is not moving like crazy, which is actually kind of bullish to me, but the actual use cases, I mean, literally 1.4 billion users on Alipay in China are now using a layer 2 on Ethereum. Like, these are real things that are happening that you can point to versus just pure narratives at the end of the day. Amazon, are we moving past 220? Amazon 221, that's up 2.16%. So some of this money coming out of froth and going into Amazon. Going into Amazon. ASTS is the same as Oklo. So the only reason I would disagree here, and yes, ASTS doesn't have revenue, is ASTS has a lot of deals in the pipeline that one can easily see the revenue coming. Oklo has actually nothing, dude. That's the difference. ASTS is a phenomenal business model, and they have tons of deals and partnerships with massive companies like Verizon where the revenue is coming. Like, there's actually something substantially late. You could still say it's overvalued for sure, but you can't say there's nothing there. A lot of these other names that have run, there is nothing there. And that's the part where it becomes something that ultimately is unsustainable. And they have a few satellites in orbit. That's also true as well. The beard is making Amit grouchy. There you go. Beyond volume, 550 million, dude. Holy crap. Still up 45%. It was up 70%. So it's down from that 70% move, 214. But still green on the day. All right, let's see if we have any econ. Oh, Canada's inflation came out. Okay, annual inflation rate in Canada rose to 2.4% in September. Wow, that's a big move. 1.9% last month, 2.4%. Street thought it would come in at 2.3%. It is the first time inflation crossed the Bank of Canada's 2% threshold in 6 months. Okay, so Canada not really signaling the best potential for America's CPI, which is going to be coming out on Friday. I don't even know how they're calculating it because the government is shut down, so we're going to see what they say. But you do have Canada inflation that's ramping up a bit right here. Not really affecting the broader market, but that is one piece of macro data. Nvidia right here down 1.3%, the S&P 500, 670.69. Shopify was up 5% yesterday. Where's Shopify today? Down 2%. Pretty much everything outside of Amazon, quite frankly, taking a hit today, which is okay because a lot of it ran up yesterday. S&P, if we don't lose 670, I think that would be pretty bullish. It looks like it wants to lose 670, but if we can hold above it, that would be nice to see. Doug said I bought puts on D-Wave. Okay, yeah, the bottom is definitely in on D-Wave. Doug is officially setting. Doug, did you buy it at freaking 31.84? And then we got these green candles. There you go. That's your bottom on D-Wave. Yeah, it does look like everyone's flowing into Amazon right here on the day. 221. Epsilera, that's down 2.3% as well. That one taking a hit. Meta down 0.5%. Salesforce down 1.24%. I mean, look, Salesforce at this valuation, I don't love Salesforce, the company, but I mean, you probably should catch a bid in the midst of some of these people looking for more potential value opportunities. Bitcoin getting green, 109.4, and then Ethereum at 3,900. Ethereum at 3,900. Where's Amcor today? It was up in the pre-markets. Amcor 3,201. All right, so holding above 32. Let's see what else we have in the pre-markets as well. Jinzo, thanks for the $10 super chat. Amit, have you considered your streaming would be impacted by in a legit bear market, say 3-year downturn? Is anyone watching? That actually goes to my point. Like, I would like to not stream every day in a bear market. It would kind of suck. I remember 2022. And the way to make sure that we don't have a bear market as easily is if stocks with no earnings or fundamentals keep running to the moon, because at that point you're bound to get, some level of a massive retracement. So yeah, look, it's not as fun to care about the markets when everything's tanking. But the best way to hopefully not have that happen is if you have a slow fundamental reason for the rally even taking place in the first place, which is what matters. Yoko, thank you for becoming a channel member. I may could you do a deep dive on Chime. I have not looked at Chime. I know Tanner is getting a little bit more interested in Chime Financial, and the reason for that is because the stock is down 50% from its IPO. So Tanner thinks it looks a little bit more attractive here. I have not gone super deep into them. I can take a look. I know that SoFi's numbers are objectively better, but Chime's valuation probably now is a bit more attractive given it's not at 48 and back down to 18. Yeah, Tanner in the chat right there, he says it's definitely a bit more interesting. And that's what we got. When markets are down, I've noticed viewership is way up. That's also true, but I feel like, so like when the market goes down, more people want to know what's happening, right? So naturally viewers will increase. This is why CNBC tries to capitalize on, like scaring people and all that stuff. The problem is if you have a 2022 type of year where every day people tune in knowing they're just going to lose money, people kind of want to stop tuning in, right? You kind of check out mentally. Now, I think there's enough junkies in here that will still care about the markets and the dynamics of it every single day because, we're obsessed with it. But the general person just says, all right, the markets suck. Stock market's not doing anything. Who cares? Gold, by the way, continuing to go down. Now down about 3.72% on the day. Yeah, Amazon really is one of the only green names today. Reddit's up a little bit, and then Amazon, 221, 2.4%. And it's crazy that after the outage, Amazon is still getting some of this love. But you are seeing it get a bit more of a move. Coca-Cola CEO is on. Let's listen to him and see if we can get any insight on what's going on with the state of the consumer based on their earnings.
Up nicely, almost 4%. I mean, organic revenue growth of 6% is higher than what we're seeing in the industry right now. Talk about what you're seeing from consumers around the globe.
Look, we're seeing the strong results from Coca-Cola because we're basically investing in a great industry. We're the leader and we're gaining share. And what we've been able to do is to adapt to the different dynamics that consumers are facing. You can see that in the US with the kind of the higher end of the income pyramid. Still got lots of spending power, still outspending, and you see growth in the channels and the products they're most interested in. But you do see the lower income consumers under pressure, doing some value-seeking behavior, whether that be channel or the pack sizes or the price point. You see some of that in Europe too. So there's a difference across the world. You see some economic sluggishness in parts of Asia, but overall, aggregate consumer demand is there. And we've been able to drive that and turn that into a good result for the Coke company.
Why then aren't we seeing more volumes? I think 1% overall volumes flat in North America. Why not the kind of volume growth that you want to see?
I think what we saw in this quarter, yes, I certainly would like to see more volume growth. In our algorithm of the total company, we expect to see more of the volume growth come from more of the emerging markets. And what we saw in the third quarter, a bit of a similar trend to the year, is some pressure in some of the key emerging markets for us. India was below our expectations. A lot of early monsoon action and some local dynamics there. China didn't come in as strong. While Coke grew, we underperformed and didn't get the volume growth we wanted in China, and also some of the ASEAN markets. So there were some weaknesses in our emerging markets that should drive volume growth, that certainly have driven volume growth in the past, as well as some issues in Mexico. So I think those will revert themselves.
So that's pretty good to see, although there are some issues in various countries. By the way, Amazon making new highs of day. The Coke CEO saying aggregate consumer demand is there. This is similar to what JP Morgan said, similar to what Citibank said, similar to what the Levi CEO said 3 weeks ago when they had the first earnings of the cycle. And they said, hey, people are buying clothes. People are buying jeans. We're seeing consumer demand. Like the fact that pretty much all of these CEOs are not arguing with the idea of consumer demand, I think it's pretty damn bullish to see. Even though we do have a lot of conflicting data around consumers and delinquencies, but if the earnings are being put up, that means consumers are continuing to buy. Coca-Cola right there up 3.84% on the day. Amit, are you still buying SoFi before earnings? I really wanted SoFi at 26.50, so I don't know. If it gets below If it gets to at least like 27, probably, but I don't want to buy a 28.60. So I'll sell some puts most likely. And if SoFi goes to the moon, I'll collect the premium. If it doesn't, then I'll get SoFi at a better price. But it kind of just ran away from me last week. So it might not be easy to get back into this one. S&P 671 about to go green on the day. Nvidia back up from 179 to 181. Then Tesla still flat on the day. The thing about Amazon, and I was saying this yesterday on the market close, I do want to caution people here. If they do not show AWS acceleration, I can see the stock going below 200 pretty easily. I don't think it's going to stay there for a while, but the market is always, I mean, if you remember 2 quarters ago, Amazon went from 200 to 185 back to 200 within 3 days because, you know, AWS was 17.2% and 17 point instead of 17.5%. Like the market is so volatile when it comes to cloud growth because they think that Amazon is losing share to Google and Microsoft, which to an extent in certain areas they are because those companies are growing like crazy. But it's also Amazon that has done this since 2006. And so the base that they're growing off is much greater. I mean, take a look at this chart right here. 76 million websites are hosted on Amazon's infrastructure. This is why yesterday, when one of their largest servers in the Northeast goes down, the entire world feels the pain. Coinbase, Snapchat, Robinhood, I mean, all those companies just get like nuked if this plays out. But 76 million websites running on this infrastructure is not a joke, and it proves Amazon's moat. So look, if AWS growth is bad, I think the stock tanks. If AWS growth is even somewhat reasonable or better than expected, I think it gets potentially re-rated, not like a Google re-rating, but it at least gets to the point where it might not be as ugly as before. Here was a journalist who's in the tech space, and this is not confirmed yet, but they put this out yesterday. Anthropic spent $2.6 billion on AWS in the first 3 quarters of 2025, around 100% of their estimated revenue. Its costs appear to increase with their revenue, showing little path to profitability. So the punchline of the article is that Anthropic is not making any money, similar to OpenAI. However, the fact that they're spending almost 100% of their revenues on AWS in particular goes to show the growth that Amazon is getting from these AI workloads. And, you know, they're not going to get 2.6 billion from every single client that they have. But if AI workloads in general are increasing on AWS, you should see a potential increase in guidance for Q4, even if it's by 0.3%, that can get the street to think, okay, this story is reaccelerating. And I think that's what would make the story more exciting. Bitcoin are we moving. Bitcoin 110. Okay, that's a nice $1,100 candle from 108 to 110. Ethereum 39.42. That's waking up a little bit from 37.50. Bitmine 53.31. That's starting to go a bit more green. And MicroStrategy also starting to go a bit more green as well. 297.5 is what you have there. Amazon's about to be up 1% year to date. There you go. The fact that half the world shut down yesterday and the stock is up 1%, it just goes to show how important valuations and narratives are in a market, because you could have something that is so important like an Amazon. I mean, literally thousands and thousands of businesses across the country could not operate. I mean, think about how much money Robinhood and Coinbase lost yesterday because people couldn't trade for, like, I think it was almost for 7 hours. I didn't get my Robinhood back until 3 p.m. in the night, or in the afternoon, which is an hour away from market close. And, you know, Amazon is barely. It is quite incredible to see how the market thinks of this stuff. Zeta's up 3.5% of the day. Zeta 1915, and then what's the other one? VG. This one was below 8, 938. Not too bad. I know it's down from the 15s because of that BP case, but at least that one's making a little bit of a move in the next decade. Still down 1% of the day. My brother works for Amazon. He said they lost a ton of money yesterday. Expect to see that in Q4 earnings. Well, that's the other thing. I'm happy you bring that up. They're going to have to give some vouchers to some of these companies. I mean, they're going to have to give some service credits. Wow, Amazon 222, new high of day, to a Robinhood or a Snapchat or a Coinbase. I mean, I don't know if it's going to be tens of millions or hundreds of thousands, but they're going to have to give something to say, hey, sorry, please don't leave us, just like CrowdStrike did. And that could be a one-time hit for their Q4 margins. which again, if they guide in a negative way, that could get the street to also be upset. And so I really think Amazon's either going to be a hit or miss going into earnings, but I think long term, it's freaking Amazon, and it's an easy stock to buy the dip on. But those are the dynamics going into Q4 that we're going to have to look at. 3M is moving. That's correct. 3M, they had a good earnings as well. Admit with the EU Freudian slip saying 3 p.m., et cetera, is the night. Dude, I'm excited to visit Europe next year. 3M right there, up 4%. Definitely excited to hopefully have some meetups and see everyone in the region. Duolingo 319. Let's look at the stock draft today. What do we have there? Matt is still definitively in the lead, 48%. Tanner's at 20, Steve's at 8, I'm at 36, and Chris is at 10. So Matt Money, ASTS, and Rocket Lab continuing to bring in some more momentum. Webull actually recovered towards the end of the day yesterday at 1190, back down to 1130. Webull was $80 at one point last year. So, I mean, this was another one of those names that had a massive run up for no reason and then came back down to reality. And it has barely gotten above 15 ever since it lost 80. And this is some of the stuff that can happen to these names that are running like crazy for no reason. Imagine buying Webull at forget 80, at 50, at 40, at 60, at 70. Like, you're not getting back to those levels anytime soon. You're done. You got to take the loss on that. And if that's what happens in some of the names that have been running, it's just going to create a different dynamic in terms of how people think of a lot of those names. Lyft is green. Lyft is up about 2%. Lyft is up about 2% on the day. Uber as well, slightly flat on the day as well. Yeah, that's the other worst thing, as people are saying right here in the chat. I mean, imagine if you were on margin and you were on some of these names, buying them at their highs. Like, then not only are you down on the stock, you have to pay back the money. And now you got to figure out how to get the money to pay back the margin. And we know that, dude, we know Verizon right there, 1.2%. Chris and Steve had a great episode on Verizon yesterday. I actually watched it last night on Steve's podcast. So definitely would recommend people who are interested in a yield play going into 2026 to listen to it. But like, we know there's a record level of margin debt out there. There's $1.13 trillion of margin debt. It's the most in history. Are we sure that there's not people out there that have used margin to buy some of these names that have done nothing in terms of earnings growth, but have done everything in terms of pumping their narrative over the past 6 months? Like, I'm sure there's some people who bought some of these speculative names on margin. And if they bought them at the top, which is when most people buy, because that's when FOMO is the highest, if those names don't come back, that margin's done. And again, I think that's just fraud that has to get out of the system. Take a look at this chart right here. We looked at this yesterday on the market close, but look at gold inflows. Gold down 4% on the day, but 34 billion, not in the past year, in the past 10 weeks. 3.4 billion a week is coming into gold and silver, or gold ETFs, and then gold and silver together, 7.5 billion over the past 4 weeks. By the way, when I was on the path yesterday, coming back from New York City, back to New Jersey, you know, the number one advertiser in the train that was like, it was plastered all over the walls. I mean, you could not look anywhere on the path, which is like, for those that aren't part of the tri-state area, it's basically like this train that connects New Jersey and New York together. The number one advertiser was Moomoo. And I was like, what is this Chinese brokerage doing advertising all across this New York City train? It's like, it was literally hundreds, because it's a really long train. Like, you know, different advertisers pay for different ad spots. They must have paid for the entire train. And I was like, this, like, you know, it's not Robinhood, not Coinbase, it's freaking Moomoo. And so I was surprised. I was like, the fact that these Chinese brokerages are trying to get these many users with this type of brand advertising is quite incredible. But this is what you would see in a bull market, right? People want to invest. So you would see that more people are willing to advertise to get those investors. Yeah, Moomoo is huge in Asia, 100%. I just, you know, it doesn't have the type of American presence that it has in Asia. But the fact that they're going after that American presence, to me, was incredible. Yeah, they're all on YouTube. They sponsor a bunch of, I mean, dude, they've reached out to me like 50 times I'm just, but I just, I don't really like doing the sponsorships, but it is quite incredible the amount of attention these brokerages are trying to generate, because they know that this is a bull market. This is the time where you get people to get onto these platforms. Apple right here up 0.5% on the day, PayPal up 0.5%, then Salesforce now breaking out a little bit, 2.39% as well on the day. Yes, Moomoo was not affected yesterday. I mean, if you use them as your brokerage, you didn't have that much of an issue with AWS. Okay, let's see some of the other headlines we have. Is Nebius recovering a little bit? Nebius was at 104. Nebius back to 106. All right, nice little V shape on Nebius. So you're not seeing a ton of pain right there. Again, I hate to bring it up, but you're not really seeing that same V shape on an Oklo. Still down 8% on the day. So again, like a Nebius should have a V shape, because the Nebius is a very high quality company. It doesn't have to go back to 140, but it probably, when the market starts to algorithmically bottom during the intraday at 102 to 105, it's nice to see that. Some of these other names are not getting that V. They're staying stuck. Or if they're getting a V, it's a very slight V, which means there's not really any momentum to bring them back to their intraday highs. And that's how you know some of this momentum is really starting to fade out. Salesforce right there, 260, and then Meta up 0.15% on the day. Air Test Systems, this is a stock that Roy really likes. This is down 8%. I'm not sure why this one's down. He did do a video on this on his channel for those that are interested. He thinks it's going to be a really important player in the semiconductor ecosystem. That stock up 60% year to date as well. 60% year to date. I want Nebius to go to 60. That's where I sold. See, I don't know if we get that opportunity. Because that would be discounting pretty much the entirety of the Microsoft deal. And that's where you have to be more reasonable and be like, yeah, look, it's probably not going back to 60. I mean, if that happens, you're probably having a broader macro collapse. But it also doesn't need to stay stuck at 140, right? Like that's more euphoria. Same thing with Hood at 150. That's more euphoria. And, coming back down, because it was at what, 65 or 55 right before the Microsoft deal. I was live with Sam when that deal came out, and Couch Investor and Jose, and we saw it go from either 50 or 60 all the way up to 103. And then, it took a little bit of a breather, came back down to 85, and then over the next month it went up to 140. But I don't think it goes back down to where it was before that Microsoft deal. Steve's milk brand is Moomoo. Dude, Moomoo should sponsor Steve. Literally milk cows mooing. I mean, the synergy in that is what needs to happen. That is what has to happen. He needs to get a Moomoo deal ASAP for his channel. Microsoft flat on the day. Speaker Johnson is still live. This guy's been live for like an hour, bro. He's just live for an hour talking about the Democrats. I'm curious when we are going to get any resemblance of a negotiation. I mean, Trump on Sunday did say they're getting closer to something. I don't know what Trump meant by that, but he did say we're having better conversations. It seems like publicly those conversations are just blaming each other back and forth. We got Mike Wilson on. Let's see what he has to say. Mike Wilson's been pretty bullish over the past year. Let's get his thoughts on how the Fed should be operating going into the end of the year.
In layoffs, and there was a low in all the jobs creation, which the revisions now are proving. And the stock market figured this out. The stock market's smarter than all of us. And the confirmation for us is that the earnings revisions now have really exploded higher in a way they only do in a new economic cycle.
That's what I think is so interesting. David Solomon was here just a little bit ago, and he called this late cycle. You think we're still early cycle?
Well, I think we just transitioned. Yeah. Now, where I think I also differ, have been differing, is that the cycles aren't going to last that long. Right, we're now in an inflationary regime. It's very different than all of our careers where inflation was coming down. And what that means is that these cycles can't be elongated the way that they were, because the Fed has to respond ultimately to higher inflation. Think about the last 5 years. 2 years on, 2020, 2021, 1 year off, had a nice recovery in 23, 24. Then we had another kind of capitulation recession in this year.
Gold officially down 5%, folks. Gold officially down 5%. I'm going to try to find the data on the last time it had a 5% down day. Silver down 7.5. Looks like all the commodities are taking a hit right now.
Year, and now we're into a new 2-year cycle. So just got to keep that in the back of your mind.
That's not that different than what he was saying then. What David Solomon was saying, we're late cycle, this could have another year or two to run.
That's right, but I think that context is important to distinguish, because if it's late cycle, then you only want to own sort of defensive, high quality names. In an early cycle new recovery, the market will expand, it will broaden out, and that's kind of what's starting to happen now. We think that's the story for 26. It looks a lot like 21 in that regard.
What do you like?
Well, we like a barbell at the moment, because we still think the Fed needs to cut rates. So we've been on the cyclical side. We have liked a lot of the tech sector. We have like financials. We have like industrials. That's the pro side on the cyclical side. And then the defensive high quality side, it's basically healthcare right now. We think healthcare looks quite interesting. Now, we do think the Fed will get with the program and they will start cutting rates in a more meaningful way once the labor data confirms what we all know, which is that the labor market's not that good. And when that happens, then we can really transition to the interest rate sensitive parts of the market that have been languishing, things like housing, things like consumer goods, all the durable goods, the areas where there's pent up demand.
How difficult is it to not have government data at this point? Yeah, because you sound so sure in your beliefs on these things.
Well, I think the government data that we're waiting for, everybody's waiting for, is mostly the jobs data, but that's backward looking. I think we've already confirmed that the trough was in April. That doesn't mean, by the way, we're totally out of the woods, but what it means is that I don't think we're going to learn a whole lot from this data that we're not seeing at the moment. I think it gives comfort. I think it will give the Fed the cover to do what I think they need to do, which is cut rates in a more meaningful way. So to me, that's the risk, is that we don't get the data that allows the Fed to cut more meaningfully.
And when you say more meaningfully, you're talking about more than 25 basis points at a clip?
Exactly. Let me just put it in context. So the Fed is behind the curve, in my view, until they get lower than 2-year Treasury yields.
Okay.
Today it's about 75, 85 basis points. So that's just 3 cuts to get to neutral. To get ahead of the curve, they probably got to cut 150 plus. And the only way they're going to do that is if we get weaker labor data, which I think is probably forthcoming, or we get some sort of bond volatility or financial stress, the third mandate, if you will.
All of your thoughts about the market continuing to climb from here, what would happen if we do get some of that bond market turmoil that you're talking about, or tensions continue on this China trade front? Because that's been the macro issue that has made markets wobble recently.
Yeah, so I want to distinguish. Our 12-month view is quite constructive for the reasons I just laid out. But in a short-term basis, this is probably the first time since April that I think we have maybe a tradable correction. And it would be those 3 things you mentioned. First, the China-U.S. trade tensions. We're kind of walking towards this deadline. The markets may get nervous around that. And by the way, it's a correction. It's not like we're going back to where we were in April. But a 10% correction would feel pretty nasty. The second reason would be we get funding market stress, which, by the way, the Chair Powell talked about last week. That's one of the reasons why we may, end QT a little bit earlier next year, because we're starting to see a little bit of funding stress, which is essentially the bank reserves are maybe a little bit too low for the liquidity we need, not just for the financial markets, but now for this economy, which I think it could be booming next year. So those are 2 reasons I think we could see some corrective activity in the near term. I don't think it derails our core view on the rolling recovery.
It's nice you said all of us have spent our entire careers in a low inflation environment. It was nice that you
One exception.
It's nice that you threw me in there. And just to, because it's hard to believe, inflation rate, right when I started in the business, 13.5%. Inflation rate, 13.5. We don't have to worry. When you think about things being bad, think of 13.
Yeah.
I mean,
I can't.
Okay, because it creates earnings growth. It's just different.
Yeah.
And if you think,
Painful for everybody living through it, though.
well, it's painful for the consumer, right? And that's why we have this bifurcated economy. But don't fear inflation next year. In fact, if we don't get inflation next year, I'll probably get more bearish, because that means the earnings story is probably not going to deliver on what people are expecting.
So Mike Wilson kind of making a very similar argument that he's made. By the way, S&P regaining 671 over the past couple of weeks now, which is that we are in the beginning of a new bull market. And that beginning of a new bull market is emblematic of the earnings growth that we're seeing, but also of the massive drawdown. By the way, the 10-year right here at 3.955, still below 4, of the April drawdown. So and this is the same thing Tom Lee says, that once you have this massive April 30% drawdown, stocks bottomed. And historically, when you have a bottom after a 30% drawdown, you tend to enter into a new cycle, which is kind of crazy to imagine, because that 30% drawdown basically happened for no reason with all the liberation tariff stuff. But the fact that it did happen is something that can't be ignored. And if that introduces a new part of the cycle, then it's a totally different dynamic of how to think historically of what this bull market looks like. But you're seeing that in some of the numbers potentially based on the earnings growth that we could get. 671 right here on the S&P. 1030, not really getting a massive slam. You're actually getting a little bit of a reversal. Bitcoin, 108 to 110. Nice to see that. Ethereum back almost to 40 or to 4,000. And then BMNR just below 53, but still holding above 50. Wow, China imported no soybeans from the U.S. in September, the first time since November 2018. Bro, I thought they were just joking about the soybean shit. I didn't think they were serious. China's really not buying our soybeans? I thought they were just like messing around. They really don't want our soybeans. Damn. No soybeans since November. Remember, 2018, the reason the rally got messed up outside of the Fed hiking was the soybean trade war drama with China. Now, given Trump's de-escalation over the past couple of days, it seems like, he literally said, I think we'll get a deal on soybeans with China. So he is confident that they'll figure something out. But it looks like they're not buying it. It looks like they are not buying it. Yeah, this is why it's 100%. This is why it's hard to separate politics from the stock market. I mean, when there's implications of these political events within stocks and obviously within commodities, futures, goods, etc., like it's hard to be separated from it. Triple V, thank you for the $200 super chat. Thank you for being here, Mr. Triple V, as well. Appreciate you being here and being part of the channel. Going back to the conversation we were having about frothy names going up for no reason. I mean, Triple V, who's become, a mentor of mine, along with Derek. I mean, they have been part of this cycle many, many, many times. They've made a lot of money on frothy names, but Triple V literally shorted. I think it was a couple million shares of Open Door at $10, and it was a really good short. I think he covered at like 830. So it's like, when you talk to people who have seen these cycles, plenty of you guys in the chat have been around .com bubble 2008. Like, you've seen these cycles, and these cycles when these names run up for no reason, like until they can pivot the company. And Open Door, by the way, is actually a special case because that CEO I'm actually pretty bullish on. And if they can somehow pivot the company to produce like earnings, that stock does not have to go to zero by any sense of the imagination. But, Triple V, Derek, they've been in these cycles where these names go up like crazy. They've lost money on some of these names before, but they've also made money by recognizing, hey, you just don't need to get into these names because these names are likely a fad of the moment that until they put up growth are going to come and go. Like a lot of names that are out there. Thoughts on UNH gapping up? Look, I like UNH here. They revised their guidance, I think 2 weeks ago. That's why they got a bunch of price target upgrades. And that's why the street was excited about them. I think there still are better opportunities in some of these AI names, but UNH is more so you can sleep well at night without having to worry too much, even if you don't get massive growth. So I don't hate UNH here. It has made a pretty big move since the 230 run. Also, dude, we got to see when these 13Gs come out in November on if the big guys sold UNH. So Buffett, Tepper, Burry, all these guys own a ton of UNH. I wonder, did they sell after the pump from 230 to 370? Now, my gut says no, because a lot of these guys bought in around 350. And I don't know how many of them doubled down in the lows of 230, 240, 250. But if they didn't, they're not going to sell for break even. They're probably expecting a $500 stock at least in the next 2 years to make some profits on. But if they did sell, then maybe, they made some quick money and left. And so I am curious when those 13Gs come out. They should be out in like 3 weeks. It shouldn't be too long until we see the new 13Gs on what happened with UNH. Yeah, Burry probably sold. Buffett most likely held on to it. Tepper tends to hold on for at least a year, so I feel like Tepper probably held on. Burry is probably out of it, though. Amit, would you go long Ethereum's BlackRock fund or just BMNR? It depends on the leverage you want. The Ethereum ETF is fine if you want a one-to-one proportional move with Ethereum. The other reason why people like BMNR, and this is what I wrote in my Substack, are the call premiums, right? Like if you buy it at 52 and this thing stays stuck between 52 and 60, you're going to significantly reduce your cost basis by even selling, 0.2 deltas on this every week. And so one of the reasons people like Bitmine is because they can artificially decrease their cost basis with the call premiums. And if Ethereum is range bound between 3,500 and let's call it 5,000, then Bitmine's not going to the moon, right? Bitmine's going to stay stuck within a 1.4x premium above that net asset value. So, I think that's another one of the reasons why people like it. Now, the Ethereum ETF on BlackRock also has some good premiums, but the Bitmine premiums are just a totally different level. Amit, did you sell calls on Nebius? No, I sold puts on Nebius. So no calls on Nebius, just puts. I'll just say it right now because, people are probably wondering why I sold puts on it. I'm doing a deep dive on Nebius. So as I've started to do my research, I'm like, okay, there's something here. Obviously, I missed this stock the whole year. So a lot of the Nebius bulls know that this is a very special name. I have not concluded if it's worth taking a real position in. But in the early stages of my deep dive, I'm like, you know what? If I have to own it at 98, I'm not going to be that upset about it. So that's why I sold some puts at 98. But there will be a deep dive on Nebius coming up pretty soon. And I am enjoying learning a lot more about the company. I just don't want to buy, dude. It's the end of the year. I don't want to bag hold anything. Like, I don't want to freaking bag hold a name that I'm not fully convicted in. Like Grab, I can bag hold because my conviction is set. And like, it's not, the company would have to really mess up for me to lose my conviction. And so it's easy to bag hold. But I don't want to bag hold AppLovin. I don't know anything about AppLovin. Even though it does feel like it's a deep value opportunity right here, but I'm definitely not going to take the risk and hold it in case I'm wrong. Same thing on an Nebius. As much as I love it, like if this thing ends up going back down to 90 and I buy at 106, it's not fun to be bag holding $16 when I could have just been a bit more patient. I definitely don't want to bag hold gold. Wow, gold down the worst it's been today. Low of days, 5.44%. 4106. Goodness gracious. Silver down 7.6. This one's ugly, bro. I'm going to be really curious to see if gold can get a rebound. Who do you think's selling today? By the way, Philip Morris down 10%. Do they have earnings? I think Philip Morris might have had earnings and maybe weren't the best earnings. Who do you think's selling? Do you think it's central banks? Do you think it's retail? Do you think it's institutions? Like, who's actually taking profits on gold today that would be causing that much of a decline? I mean, 5%. Hold on. That means gold has lost in terms of market cap. If I'm not wrong, gold has lost 1.5 trillion in market cap on that 5%. Yeah, I believe that's 1.5 trillion. So that's 1.5 trillion or 1.3. It was at 30. Now it's at around 28.8. That's $1 trillion leaving gold, bro. That's why a 5% move is a big move. That's why a 70% move is also a big move this year that I don't think anyone's been able to explain. But a 5% drawdown also takes a big hit. Okay, Philip Morris did have earnings today. Folks, this is why we hired Cactus Jack. This, for those that don't know, he has joined AK Media full-time. This is why we have our own Bloomberg terminal. There you go. Philip Morris. Okay, so earnings, EPS 224 from 191. That's a beat. Revenue 10.8 versus 9.9. That's a beat. Revenue's up 9% year-over-year. EPS 17% year-over-year. And they raised guidance. Why is the stock down 10% on a double beat and a raise of guidance? That is weird. These guys sell cigarettes, right? Yeah, they sell cigarettes. Okay, so they're guiding for more people smoking, and they beat on the top and the bottom. This is a $220 billion company. Bro, I didn't think Philip Morris was that big. I thought they were like a $70 billion, $220 billion company. Oh yeah, and Zyn, that's their main thing, right? Zyn, yeah. I've still never taken Zyn before. Yo, put in the chat if you take Zyn. Put in the chat if you take Zyn, because I know it's getting popular with the youth. I can say that now because I'm 28. So I know the kids these days are popping in. In my day, we used to pop Molly, but I guess the kids want to do Zyn these days. Do you do Zyn? Yes or no? Put a poll in the chat. Just kidding. I've never done Molly. Too much of a bitch to do. too much of a scaredy cat to do something like that. But Zyn is like nicotine, but you like put it in your gums. It's the weirdest thing ever, bro. It's like a pouch of nicotine and you put it in your gums and you just go about your day. I've never understood it. But it's healthier than smoking, I guess. There's less like there's like no tobacco in it, right? Because it's not a cigarette, it's just nicotine. But there's a lot of CEOs that actually do it as well. It's like yeah, this is what it looks like. This thing right here. There's a celebrity that owns a big brand around Zyn. I forgot the name of it, but why? That's weird. Why is the stock down 10% on those results? Something in the earnings they must have said is getting the street to not be that excited. Oh, Tucker Carlson. Yes, Tucker, that guy. He loves his Zyns. No carcinogenics is the big deal about it. Tucker owns ALP. Okay, so there you go. It's just nicotine salt in a nylon pouch. 83% of you say no. Yeah, I've never done Zyn, but it is a big, big product. All right, here's the update on Netflix and Warner Brothers and potentially getting that buyout.
That, of course, has been the plan that's been in place for quite some time, and one that many expected they might continue to pursue, even with Paramount's interest. But that being said, citing what is interest from multiple parties, my belief, my reporting indicating all those parties other than Paramount have been interested in buying the streaming and studio business. But nonetheless, citing all of those multiple parties, again, not naming those parties, but citing multiple parties, the company has said that it will initiate a review of strategic alternatives to, of course, what they always say, maximize shareholder value. And so that process will begin. Now, they already have in hand a bid from Paramount. I reported previously, perhaps a range of 22 to 24, largely made up of cash. At some point, I expect to be able to sort of get a sense exactly where Paramount ended their bidding, so to speak, privately. But now this will become a sort of a public story, if you will, as you can take a look at Warner Brothers stock moving up a bit. Remember where it came from, of course, before all of this speculation began, with the Wall Street Journal story discussing Paramount's interest in mounting a bid for the company. Stock was somewhere around $12 a share.
So speaking of content and a lot of these content acquisitions, take a look at this. The OnlyFans CEO is live at a panel right now. Here's two things that she said. People don't want AI-generated content. AI can't replace human-created content. So you got the OnlyFans CEO kind of hedging back against a lot of these arguments that quite literally Sam Altman made last week around this whole erotica element of ChatGPT, that the best form of content in that niche is going to be not AI generated. It's going to be for humans. Now, obviously, yeah, she's saying that because she has a business that she wants to continue running, and you need human generated content to make that happen. But I wonder, dude, if people start flipping to AI stuff, I mean, what if OnlyFans kind of makes their own AI content? I mean, like, there's a lot of different ways that you could imagine this ends up playing out. My dad, I was with my dad last night for Diwali, and for the first time, my dad asked me, because he's learning a lot more about AI and he's like reading all these articles about it. He's like, do you think AI is going to affect your career one day? And I was like, yeah, people might not want to listen to a human talk about the stock market. They might want to get their news from an AI. And he was like, so how are you going to hedge against? He's like, how are you going to protect yourself against it? I was like, the only thing I can hope is that more people care about authentic human level creativity over a bot that's providing information to them, right? And I don't know. I mean, who knows? Maybe in 10 years, people just don't care about the authentic human-to-human connection that we have via content, and they like getting it through something that's more automated. But it is a risk for every single industry, whether you're in content or blue-collar job, like everyone could be affected by it. Bitcoin moving up. Bitcoin 111. You're getting some momentum right there. All right, Bitcoin. That's a $2,500 candle in the past 20 minutes. So nice to see Bitcoin making a little bit of move. Ethereum still lagging just below 4,000. Can AI mispronounce words as badly as you admit? See, that's not going to happen, and that's why I might be able to keep my job. I told him, I was like, Dad, I think hopefully the level of creative, authentic connections that you build in this type of industry, which is media, are enough to sustain the threat of AI. But no one's safe. No one is freaking safe. And at the end of the day, it comes down to just how much are people going to be using this for every single part of their life over the coming decades. Bitcoin right there again, 111, starting to get a little bit of juice right here. Bitcoin's been doing that over the past couple of weeks. It goes up around this time, 11, then by 2 p.m. it comes down, then by 5 p.m. it comes back up. This will be the first October if Bitcoin doesn't make a move where BTC will be down for the first time in 10 years. October would not be happening if Bitcoin does not get to at least, they have to get to at least 115. Bitcoin needs to get to 115 by October 31st for it to not, which, I mean, it's 4,000 away, which is not that crazy. But it has to hold above that by the end of October for it to still be a green October for Bitcoin. No, now, hey, here's something that I just thought of, which some of you guys have been thinking about for the past hour. Maybe Bitcoin's going up because gold is going down. Maybe Bitcoin's going up because gold is going down. I mean, I don't know if everyone's selling their gold is getting into Bitcoin, but maybe a little bit of the people that are taking profits on gold are coming over to digital gold. Maybe that's the trend for the next 10 days of October. We get our October or our Uptober. Then again, if you're selling gold, why would you buy digital gold? Like, the people that are in gold in the first place probably don't care that much about digital gold. I'm sure there's some people that own both, but I'll say the far majority bought gold instead of Bitcoin for a reason. So if you sell it, do you really go to something that's much more volatile than gold? We're going to have to see if that rotation actually becomes real. Call Peter Schiff. Dude, Peter Schiff must be having the time of his life. This guy was on the wrong side of the gold Bitcoin trade for basically 7 years. Every interview, he would just get humiliated because the price of gold was flat and Bitcoin was going to the moon. And Bitcoin has still done very well. And obviously, he would have made a lot of money if he picked Bitcoin over gold. But he must feel like a legend for Bitcoin doubling over the past 2 years. And he's been talking about it for a long time. It's just during the time that he was talking about it, if he talked about Bitcoin or if he made an investment in Bitcoin, he would be up like 10x, which would be different. Yeah, Bitcoin, Solana, Ethereum, Doge, Shiba Inu, and Cardano, all of those are green. Yeah, this might be a little bit of a rotation. Yeah, look at that. Look at the hour chart on all of these cryptos, all of them up on the day. This might be a little bit of a rotation, folks, which would be nice to see because a lot of us are in more crypto derivative plays than gold derivative plays. Like, the only gold derivative plays are gold miners. And yeah, it's gold miners, right? I mean, that's it. Like, you can either do a gold ETF or a gold miner. There's not that many other derivatives to go long on gold. S&P 672, high of days. S&P going green along with Bitcoin and Amazon, still up 2.2. So you got Amazon and the S&P going higher. By the way, you know how I said yesterday there's only 2 real business models in the world? Paying for a product or advertising for a product, aka you buy a product or service, you pay a company money, or you pay someone to get someone to buy your product or service. And like, that's how you can categorize the majority of businesses on the planet. I was thinking about it yesterday. There's a third one. There's a third business model that I think these 3 encompass the majority of every single business on the planet. One is you buy a product or service. One is advertising. The other one is lending. Lending. I can't believe I forgot about that. Banks. I mean, the other way to make money on this planet, Bitmine going green, is you charge people interest on giving them money. And you become, a pseudo bank to be able to to generate yield off the money that you're lending out. I think that's how you could sum up a lot of businesses on the planet. People either directly pay for a product or service, people pay for an advertisement on a product or service, or people pay to borrow capital. Seems to be those are the three major ways that people can end up making money in the broader economy. BMNR going green. Matt says my full-time is private money lending. Yeah, I mean, lending is a massive. And I was thinking about that because I was looking at the margin debt and I was just like, all these brokerages are making tons of money off lending people money. And they have to pay for a certain cost of capital to be able to have the credit line to be able to lend money. So there's someone making money off them lending money. It's this cycle of just people constantly lending out more money and hopefully generating some yield on that money to pay back the money that they're borrowing. Bitcoin right there, 54. That is green on the day, 0.485%. Ethereum's trying to crack 4,000. There it is, Ethereum 4,000. Bitcoin 112. Look at that. 107 to 112, folks. Just this morning, it was at 107 at was it 845 roundabout? 850? Not bad. A nice little $5,000 candle right there. And then Ethereum back to 4,000. Donvin, thank you for the super chat. I might quit how I get my adult entertainment, but never quitting. AK Media travel has kept me away from this community. Miss you guys. Donvin, appreciate you, man. Thank you for being here. I think yeah, that is the goal, at least for me, to hedge against AI, is to try to continue making authentic content that can resonate with people. And that's the best way to keep this going. And again, I do not mean to be on a rant today about Oklo or Quantum, and Oklo, by the way, is still down. It's not really getting that recovery. Like I have zero vendetta against those companies. I do not care if you're in these companies either. Like I'm not short. I don't have puts. I'm not Skrelly that I want to see this thing go down so I can make millions of dollars. Like I just personally really, really, really want to keep this bull market going. And I feel like most of us know the stocks that don't have anything going for them, going to the moon, is not the easiest way to keep it going. And so it's not to be aggressive against any of those stocks. I try not to be super, super biased, being bearish or bullish like that. Why would I want to do that? I don't want to isolate people from watching the content if I'm super bearish on a name they like. I'm just saying it. Sometimes you got to call a spade a spade. Like sometimes some of these names just need to take a breather. They don't have to go to zero, but they cannot keep going to the moon. It's going to be really hard for Nvidia to go higher if a lot of these other names are going higher for no reason, when Nvidia is putting up the best earnings we've ever seen in history. And that's why it's important. Duolingo right there, 324. That's up 3.6. So Duolingo getting a little bit of love. TFC, that's up. Iran, nice little recovery. I mean, it was down 7. Now it's down 3. So you do have some juice right there on Iran, 57.47 on the day. Pound here is still flat at 181. Oscar continues to run as well. This one, let's watch the video they put out yesterday because we didn't watch the video. Wow, 6% move on Oscar. They put out a video on their AI. Okay, so this is what they introduced yesterday.
Hello Meno is Oscar's bold new plan, reimagining menopause care with real talk and reliable resources. Say hello to $0 midlife care. Say hi to menopause experts who get it, and rewards just for doing healthy things. And don't forget to say what's up to real savings on healthcare costs. Because with Hello Meno, more care is covered where it actually counts. And with all of Oscar's great benefits, you and
Okay, so that is a new product. That might be where the stock is up more than their OpenAI announcement yesterday.
Question.
This was the OpenAI announcement.
About your coverage or health. Meet Oswell, your new AI health and benefits pal. He's friendly, he's smart, and he's here for you 24/7. Ask Oswell anything about your plan, med refills, or that weird hip thing you've been ignoring. Oswell keeps your health history and plan details in mind, so his answers are personalized. And he can point you to great doctors and specialists in your Oscar network. He'll even help you come up with questions to ask during your appointment. Oh, and if you need $0 virtual care or a quick text visit, he's got you covered with that too. Oswell is hyped to get to know you, so he can help out even more. Right, Oswell?
Okay. It's either the menopause announcement or the Oslo announcement, but Oscar up 6% on the day based on a partnership with OpenAI and essentially creating a personalized chatbot for all your data inside of their proprietary application. You know, the biggest thing that I think we've seen from AI, at least in terms of the use cases, and we've got to see more than this, but I think it's undeniable. The biggest use case we've seen is a chatbot. And I know that chatbot should not be the only use case of AI, but can anyone name anything else besides chatbots? Google right there, 250, losing 2.4%. Like, it's chatbots across the board, whether it's Canva or what Robinhood's coming up with Cortex, that's going to be a chatbot for finance. Like, okay, image creator, I guess, is the next one. But like, in terms of outside of like something creative, something that people are using on a day-to-day basis for productivity, it ends up FSD is a whole different category. I'm not talking about FSD or robotics. I'm talking about like the things that we all use on a daily basis as we're navigating our lives. It's these chatbots. And like, you know, maybe that's not the worst thing in the world. I think that the next evolution of that is for it to be agentic, AKA we don't even have to chat with a bot. And that's where it gets like really intense in terms of productivity. But so far, the biggest use case has been a chatbot that we've seen from AI. And hopefully robotics and FSD ends up becoming the major use case. But you know, outside of transportation and physical labor, it's a bot. Whether it's a medical bot or a lawyer bot, whatever type of bot it is a bot that's generating most of the productivity. Now, again, and this is why I think Palantir gets a little bit more of a premium, because Palantir is not just using a bot. A lot of what they're using is agentic workflows inside of the enterprise. And based on what they showed at AIPCon, there's a lot of different examples of that. But that's like using the LLM almost as like a foundational element to power something happening versus one of their clients just chatting with an LLM inside of Palantir software to figure out the answer, which feels like the most mundane version of what the use case could become. SoFi going green, 28.77, trying to get back to 29. That's up about 0.28% on the day. Dude, I thought music creation would be a way bigger story in AI than it would be. There was a fake Drake and Weeknd song that came out 2 years ago via AI. It was actually a really good song, and it was like exploding on TikTok. And then you thought you would get more of that, but like it didn't really turn into a big industry. Like, you know, most people that go on Spotify don't want to listen to some AI generated nonsense. They want to listen to Taylor Swift or Travis Scott or like, you know, artists that you have an emotional connection with. So I feel like music creation has not exploded in this AI ecosystem. But obviously there are some people that care more about AI. Why is Google down 3%? I don't know. Let me see if there's any headline on Google. It looks like there should be when a Google falls 3% like that. Oh, wow. OpenAI to debut a web browser today. OpenAI to debut web browser today at 1 o'clock. Dude, OpenAI has been doing a lot of these live streams. It's like one every other week, bro. They're really trying to prove that they can put out new products into the world. Okay, so then the question is for Google, you know, how many people are going to stop using Chrome and use OpenAI's browser? I don't know, bro. I've used Chrome for the past 15 years. It's going to be hard to stop using Chrome. It's going to be really freaking hard to stop using it. But I guess we're going to see what they come out with today. There are people who make custom music for their games that they stream. It's actually pretty good. Yeah, there's definitely a use case for the AI music stuff. I just mean like an AI music artist getting 70 million monthly listeners on Spotify. That was kind of what people were afraid about 2 years ago. That's definitely what Spotify and the record labels were afraid about, because how do they make money off that? But that hasn't become a thing, right? That AI musician that people want to listen to more than listen to Justin Bieber. Like, no, they'd rather listen to Justin Bieber because it's Justin Bieber. There's like a connection to Justin Bieber. So I don't know if we really see a ramp up in AI music that, you know, makes us paradigmatically change how we think of music in general. Same thing with movies, right? You know, we've not really seen a real AI movie go viral yet. But that might be something in the future that ends up playing out. Yeah, UMG did get mad about the copyright about it, but like at the end of the day, if there was a vast amount of people creating this type of content, like it would find a way to get distribution, even if it wouldn't be allowed on Spotify. And I just have not seen, there was one Drake AI song that went viral. And since then, I've not really heard, you know, more of those songs actually coming out into the world. I think the music part hasn't started yet, but Timbaland has done it. I have seen Timbaland do a lot of these Instagram lives where he's like making these different beats. And so you could see more excitement, at least on the side of producers that are using AI a little bit more. Here's an update on China and what we've got going on based on some of the new stuff they announced this morning.
Well, Sarah, this meeting is called the Fourth Plenum, and over the next 4 years, Xi Jinping and other policymakers are going to be mapping out the economic priorities for 2026 until 2030. And it probably comes as no surprise to investors that the likely focus is going to be on advanced manufacturing as well as new technologies such as AI, semiconductors, robotics, as well as new energy. Now, this is a reassertion of what we already know, that the Xi Jinping administration's primary goal is to turn China into a global tech player and really dominating globally these technologies. In addition to that, of course, the leadership wants these technologies and tech innovation to promote the economy. However, in the past few years, I would say, we've also seen that the Xi Jinping administration hasn't really been paying as much attention to policies that would promote everything else, such as consumption. And that was showing up in some of the economic data that we had today. The FAI, for example, contracted. Private investment is down. Consumption met expectations, but these were very low expectations. And there is an expectation and a belief that some of acknowledgement is going to be had in the 5-year plan of this issue. There's a belief that a policy platform could be in place to try to encourage more household consumption. And there's some speculation that this means that we could see some targets set at a local level for consumption growth. Guys?
Eunice, there's been some who argue that Xi has already started removing some stimulus to the economy to let it sort of slowly decelerate going into these tougher discussions. Can you talk about to what level the government is supporting activity?
Well, the government has been supporting some activity. We've seen that over the past couple of years, I would say. But yeah, these have been in fits and starts. And I haven't heard that he would be rolling back a stimulus, but there's definitely a belief at this point from many economists that at least for the rest of this year, we probably won't see much more stimulus. And part of that is because the Q3 number came in at 4.8%. That was a little bit slower than Q2. And because the overall economic growth target is 5%, people are saying likely the government is going to hold back.
And see, look, that GDP number being the lowest in a year and that stimulus starting to come to an end, China cannot mess up any meaningful relationship with the United States. Because if you're not doing stimulus and you're not getting your GDP growth to be at levels it was at last year, which it's still pretty good at 4.8%, even if it's not at like 6.2%. Losing the American consumer would be the worst thing for the Chinese. So I don't know. I'm feeling pretty optimistic in South Korea. Trump and Xi get a deal done. And if we do, then that could be another bull case going into the end of earnings for the market. Google really down 4% on this OpenAI news of a browser. I mean, I don't see why it is that big of a deal for Google. I mean, yes, theoretically, people might stop using Chrome, but OpenAI is going to have to put out a really good browser today to get people to not care about Google. Look at Bitcoin continuing to make a move. Almost 113, folks. At the same time, gold continues to go down. Maybe you're getting a little bit of juice from gold into digital gold. Maybe. Adobe also getting a move, CRM getting a move. So some of these plays that have not really moved, again, going back to the theme of today's show, quality names getting a bid. Adobe up 4%, Salesforce up 5%. Your Oklos, your D-Waves are down 7%. And look, I don't love Salesforce and Adobe as long-term investments, but I've said for the past couple of weeks, they're undervalued. You can't look at their numbers and say they're not undervalued. It's just there might be better opportunities for your capital, especially if they become value traps, just like PayPal is undervalued. PayPal up 1.2%. You just might not want to be in PayPal for the next year. But if I had to pick between a Salesforce getting love and a random quantum name that has shown nothing getting love, I would pick Salesforce any day of the week. It's just healthier for the market environment for a company doing $40 billion in revenue to get a bit of a boost. So you are seeing potentially a bit more of that rotation. Oh, this is a good point by Austin. Interesting that OpenAI didn't build the browser for Microsoft and fix Edge, but instead are making their own. Microsoft would have given them distribution. That is a hell of a point. It goes to show that Altman and Nadella are not boys, bro. They are not boys. Like why wouldn't they build the Microsoft's distribution is massive. Bing still gets 1 billion users or 1 billion visits every month. Now, Google gets 88 billion, but still, it's not like Bing is starting from zero. If you could rebuild Microsoft Bing and brand it in a more AI version of what OpenAI is trying to create, that would be a meaningful partnership. However, OpenAI probably thinks that they don't want to partner with a legacy company like Microsoft on search. They want to build their own version of it. And that's nothing wrong for them to think like that, but it also goes to show that they have zero intention of really building something special with Microsoft. They just needed a lot of the cloud computing with Azure back in 2023, and they had to give Microsoft one of the best deals ever to be able to secure that agreement. But it doesn't seem like they necessarily care of fixing Microsoft's issues. Even Copilot, right? Copilot started using a lot of other models besides OpenAI, and Nadella doesn't really care what model you use as long as you're using it through Copilot. BMNR, now that ETH is above 4,000, is at 54.65. Okay. So that one coming back to life as well. We need ETH to make a run to 4,500 to get Bitmine closer to 60. So ETH's really got to make that move, but right now it's kind of been stuck around 35 to 4,000. Yeah, Amazon really being the major winner on a day like this. Nebius, are we still Amazon right there, 222. Nebius, are we still moving? Nebius 106. All right, up a little bit from 103. Hood still down 1% of the day, and then Palantir basically flat on the way. The gold is still down. It bounced a little bit. It was down 6%. Now it's down 4.6. So you have somewhat of a move to the upside, but still down overall on the day. Here's some coverage, I think, on gold that we might be getting here.
I do think the sentiment around private credit and the implications for regional banks, for example, tells us a lot about how uncomfortable some market participants are with the duration of this rally. Look, we've got 2023, we've got 2024, continued outperformance in 2025. But a key thing I anchor to when I think about overall risks is how much of this market is being driven by earnings relative to multiples, and 2/3 of the market is being driven by earnings. I think when it comes to exposures to some of the private debt, it's kind of a smaller investor base there, and we don't think we're going to see this spreading across many banks or many credit funds, but people are going to have to manage the risk.
Right. You said you were listening for, in the earnings calls, hints about productivity and whether or not this tech boom would start to get monetized in a sense. Are you hearing it so far? I know it's early.
Yeah, and companies are going to give a couple small examples, but they're going to want big data, frankly, before they, pound the table and say, this is going to change the shape of my labor market or what we're going to do to our workforce. We've already seen pockets of significant productivity growth, even within Citi. My CEO, Jane, was talking about this last week.
The Journal did a huge piece.
Yeah. And it's really, really important. We're at the beginning stages, I think, of people knowing how to use these tools, leveraging them, and increasing their productivity. Does that lead to a significantly smaller workforce over time? I don't know. But I think the shape of our everyday work is going to continue to evolve. I and my team continue to use many different tools and alternative data in ways that we had not in the past. So I'm very excited about the kind of work and investment analysis we can do with the AI.
I mean, the use cases are exciting, and we heard some from the CEO of Coke in the last hour around advertising and sales, making sales processes more efficient and how they're working on it from that point of view. Kate, the question is just what's priced in by the market here, and is it the CapEx numbers? Is that what's going to continue to fuel the hype and enthusiasm of the market as long as those?
NASDAQ trying to hold on, but Google really getting wrecked here, bro. It went from 2.3% to 5% down on this OpenAI news. And as she said right there, right, it's a question of multiple expansion in the midst of earnings. And, you know, one of the reasons gold is getting some love is because people think that multiple, not like actual multiple, but the broader sentiment around gold should continue to expand. The sentiment around Google and why the multiple is contracting right here is because of this OpenAI news. And I agree with Batty. It feels like an overreaction. It really does. Google's messing up the S&P as well. Yeah, look at that. 5% drawdown on Google. There's your, what is that? 0.3% drawdown on the S&P. I don't know. We saw this happen last time too. This was like 7 months ago when OpenAI announced the plans to create a browser. Google was down like 7%. But, you know, people kind of moved on. They didn't care. Google right here, down 4%. Google to 150, Oklo to 200. Yes. Oh my gosh. Dude, that's what's going to happen. Now that I usually don't try to go on a rant on these names. That's what's going to happen now. My rant was the bottom of Oklo. Oklo's going to go to freaking 200. And everyone's going to be like, all right, Amit, can you rant about another stock so we can buy that shit? That's exactly what's going to happen, bro. That's exactly how this is going to play out. I'm praising Google, shitting on Oklo, and Oklo is going to go to the moon. That's what's going to happen, dude. It's going to happen. Yeah, tens of billions of market cap wiped out on the announcement that OpenAI might have a product and has 0 users. Perplexity has released a browser as well. Now, OpenAI has more distribution than Perplexity. But look, here's the other thing about why this OpenAI browser news might not matter that much. A lot of OpenAI's users are on their phones, and it's mobile. I mean, like, yes, there's people that obviously use it on desktop, but I don't have the exact stats on this. My gut tells me a lot of people are using the mobile app, and a lot of people are young and they're in college and high school, and they're using it to do tasks on a daily basis, ask all these questions. Their behavior pattern is already set with using Chrome as a browser. They might go to Chrome and then click on chatgpt.com, but for them to open up a brand new browser, I mean, that's a whole different user experience. It's not necessarily easy to get people to switch to something like that unless the product is definitively better. And I guess at 1 p.m., we're going to see what their live stream looks like and how good that announcement is. Because who knows, maybe it's so much better than Chrome that it blows away expectations. But I feel like it's just going to be a browser that directly links to ChatGPT. That's going to be the gist of it. And as a result, it might not be that exciting. Yeah, also, do you want to give all your data to OpenAI? I mean, dude, this is a big look. I usually am not that like nitpicky around people giving up their data, because at the end of the day, if we agree to use these products, we're going to be giving up our data. It's the nature of how we operate in a society that's rooted in technology. However, after Sam Altman said that shit about new adult verticals on ChatGPT, immediately I was just like, do you really want all your search results and all those conversations being used to train these models in OpenAI? Which, by the way, is also going to happen with Grok and Gemini. I get it, but people already have a bad perception of Sam Altman and the way he thinks about data. Similar to Zuckerberg with Meta, right? A lot of people just don't like Facebook because of the perception of Zucks and data. And it makes you wonder how many people actually want to give up valuable search data to a company that could be using it for a lot of different things. Yeah, you gave everyone your birthday? Yes, exactly. So I don't know. We're going to have to see. But Yeah, dude, that quote right there, Altman saying we are not the moral police of the world tells you everything. And by the way, I would be one to agree with that frame of reference that a tech company should not act as the moral police of the world. However, in the age of AI, like to take that type of a stance, I don't know, bro. It's a little tone deaf in my opinion. It's a little tone deaf. Even Figure, the Brett Adcock, he was asked with Mark Benioff at Dreamforce if you would use your robots for military technology, and he was like, no. He was like, we don't want to be given robots to the military. He's like, that's not the culture we're trying to build. We're not trying to have robots on the battlefield. We're trying to make robots do your laundry, right? He doesn't want to be associated with that. And there's a lot of ethical implications to think about robots on the battlefield. And whatever side of the aisle you're on that, it is one of those things that is super polarizing and requires a lot of deep thought. Chalking it up to say we are not the moral police of the world. I mean, I don't know if that's enough of a easy way to approach this ecosystem. It's very laissez-faire. Maybe AI can't just be that laissez-faire. Bitmine 55, that's green. ETH trying to break 4,100, 4,064. Bitcoin very close to 113. Very close to 113. All right, let's see if we can get there. I am probably not going to stream the GPT event. We'll cover it on the close, though. But it's going to be a little tough for me to stream it. Dude, how's it 11:30 already? Goodness. The stream went by quick. I didn't even notice that. Ethereum and Bitcoin. Ethereum 4,000. Yeah, that's 2 hours away, bro. That's a long time away for that stream, but we'll cover it on the close, and we'll see if Google tanks even further. Dude, is the NBA coming back tonight? Why are you guys saying betting NBA? Is the NBA back tonight? Is the first NBA season game tonight? Oh man, it's back tonight. This is not pre-market, right? This is like a legit game? Or is this pre-market? Lakers Warriors. Dude, but LeBron can't play, right? Because freaking LeBron has the injury. So it's going to be Luka versus Curry. Okay, I'm definitely betting on this. Did Robinhood unveil the prediction markets for the NBA? Oh, yep, it's already there. Wow, it's already there. 58 cents for the Warriors, 43 cents for the Lakers. Did I say pre-market? Oh, shit. I meant to say preseason. This is how you know we're a junkie, but this is how you know if the stock market falls 20%, there will be a select few of us that come back every day, as sad as it will be to see the red every day, because we are freaking junkies. We are junkies. Yeah, I'm definitely betting on that, bro. I actually like the NBA, and I think I know a little bit more about it than football, so I think I got to go Warriors, bro. I think I got to go Warriors. Got to go Warriors today. Everything is a market to admit. Exactly. Kraken Robotics up on the day. All right, so Kraken, again, these guys trade OTC. They got a nice 14% move. The thesis on Kraken, for those that haven't heard of it, and I've not done a major deep dive, but essentially they're one of the major suppliers for Anduril, especially for their underwater machines. And so a lot of people think that, hey, if I can buy Kraken, given they have such tight relationships with Anduril, which is correct. There's not that many companies that have direct vendor-distributor relationships with Anduril. That is my proxy of owning Anduril. I don't know how legit that argument is. I can understand people's eagerness to think that Kraken is your proxy. I don't know enough about the company to be super excited about like their financials or anything, but that has been a majority of the reason that I've seen people get excited about the name. And so it is OTC. You can't buy it easily. You're going to have to go through, I think on Schwab and Fidelity, they allow OTCs. Robinhood, Webull is not that easy to get OTC stocks. But now if this stock can make it onto the NASDAQ on like a exchange that has massive distribution, I think that's when it can really start to make a move, because you're going to get a lot of people that in general just want something as an Anduril proxy. And if they can easily buy it, they probably would buy it. But as of now, it is still OTC. Yeah, you likely could buy it on Schwab because they offer OTC names. Silver and gold still down while Bitcoin making its move, 112.8. Folks, the last 10 days of October, if we see a gold dump and a Bitcoin pump, that would be fascinating because it would keep the October thesis alive for freaking Bitcoin. OTC is over the counter. That's the term for it. So basically, it's not on all the regulated exchanges. So there's a lot of stocks on OTC you should stay away from. They're like pink sheet penny stocks, but there also are some really good companies that just haven't made their way to the regulated exchanges. But if gold is down 5% and Bitcoin's up 5% to end out the month, Bitcoin gets to stay green for October and maybe sets itself up really well for November. Also, last couple days of October, we get that rate cut. We get October 29th. We're going to get 25 bips of a cut. Theoretically, that should be way more bullish Bitcoin than regular gold. Again, gold is a hedge against monetary policy. Bitcoin should be leaning into monetary policy. But we're going to have to see if we end up getting that rate cut as well. It's called October because out of the last 10 Octobers, 9 of them have been green and very green by that matter for Bitcoin. Like we're talking about 17% months, 10% months, 25% months. So still got 10 days left. Maybe that ends up playing out. S&P 500 right there, 671.95. Google still down 4% on this opening news. Oh yeah, the other headline that could be helping Bitcoin today is this Fed meeting, right? We talked about that. Yeah, that's live right now. We're not going to stream it, but if anyone wants to watch it, I'll put the link in the chat. It's on the Fed's YouTube channel. They're having an entire conference today around crypto banking. That could also be another reason why Bitcoin and ETH are moving. Cointelegraph reporting the Federal Reserve is studying a new payment account model that would give fintech and crypto firms limited access to Fed payment rails without full banking privileges. Wow. That would be giving some of the banking privileges, not all of them, but some of them, some of the ecosystem that the banks have access to these crypto firms. That's actually pretty damn bullish. We don't have the full details on what that would look like, but that would be opening up a lot more space for innovation and, quite frankly, to be honest, liquidity for these crypto companies that get access to the payment infrastructure of the Fed. Yeah, that could be the reason Bitcoin's. Yeah, there you go. 113.1. Now it's moving. 107 to 113. $6,000 candle in 2 hours. Is that bearish Galileo? I would hope not. Dude, if Noto can put up some good Galileo results next week, which I don't expect, but if he does, SoFi could really have some fun. But that might be a 2026 story for Q1 instead. All right, cool. So there you go. Bitcoin, look, I'm losing my voice. I've been talking for 3 hours. Bitcoin 113, Ethereum 4,000, S&P holding flat on the day, but still 671, not too bad. Everything else relatively red outside of Amazon. That's up 2.5%. And we'll be back on the market close. So on the close, we will be reviewing this OpenAI Google browser. I'll probably tweet about it in a couple hours. So if you're following me on Twitter, you'll get the update there. We'll talk about Netflix earnings. That's a big one. So we'll do that. And then we'll talk about Technical Tuesday. So we have Tech Tuesday, Netflix, and this OpenAI stuff, and we'll see the impact it has ultimately on Google. Fear and greed, we were at 30 on fear. We were at extreme fear on Friday. We're at 30 on fear. So you're seeing fear and greed start to get a little bit more normalized, which is not too bad. Oh, wait, we got to do the Netflix pump or dump poll. Okay, last thing before I leave, and then we'll do word of the day. Netflix pump or dump. Let's see what you guys say right now versus right before. Last time, we all thought it was going to pump, and it dumped by like 5%. So I don't know if we're going to get the same results, but we got to see. We got to see how this plays out. Siege, thank you for the $20 super chat. Tell your father I said that there is no way AI could ever replace your insight. Thank you for everything you do. Siege, deeply, deeply appreciate you. Thank you for being here. And yeah, hopefully, more people continue to enjoy the authenticity of the content and the mispronunciation of the content as well. And look, I'm not going to be perfect. AI probably will be perfect. I'll probably get a bunch of things wrong in the course of my analysis after you do this for a long time. But I think that also shows you're a human if everything's perfect via AI, it's not as easy to consume at the end of the day. So I appreciate you being here as well. Manohar, thank you for the $50 super chat. Overall data says SoFi Q3 will post a $900 million to $1 billion in revenue. If SoFi actually hits $1 billion, I want to hear you scream the same way you did when Palantir crossed that mark. If they do hit $1 billion in Q3, do you see SoFi heading towards 40 by end of year? Look, if they hit 1 billion, that would be really bullish. Obviously, I don't have a massive SoFi position like I did when Hood and Palantir hit $1 billion, so it's a little bit different emotionally, but I will be very excited for you guys that are into SoFi because I know retail is very, very happy. I mean, Josh was on the channel yesterday. He has 300,000 shares of this thing. So it is a massive retail name. I think they can hit $1 billion based on Tanner's videos. I think it's very possible. He's been pretty bullish about the member growth. If they hit $1 billion, do I see $40 by end of year? I don't know if the billion is the reason they would get to 40 by end of year. I think the rate cuts and potential 40% growth, remember they did 44% last quarter, that could be why they hit 40 by end of year. $1 billion in and of itself, I don't know if that's like the only reason. But if they can get up the growth, and the real way they hit $40 is if that operating leverage starts to get higher. I mean, that's one of the things about Palantir and Hood that has really got the street excited. Their operating margins are 40 to 50%. SoFi is, I think, at like 14, 15% or something. That gets up anywhere near 20%. I think that's what gets the street really excited, which means they would just have a massive beat on EPS as well. All right, cool. That's what we got. Thank you, everybody, for being here. Let's do word of the day, and then we'll check out the pre-market tonight for the NBA season, and we'll see if the Warriors can beat the Lakers and what happens from there. I'm just kidding. I know it's a preseason, but it is funny that I said pre-market. Word of the day, Quota. Interjection. Indeed. Quotha is an interjection used to express surprise or contempt, essentially meaning indeed. I've never heard of this word before. All right, if anyone wants to show their affirmation with something that is being said, they can say quota. Quo isn't quote. Yeah, I guess that's... This is a useless word. Dude, some of these words are weird. We're not going to get the subscriber count for Netflix, unfortunately. They don't disclose that anymore. So, I mean, we're going to have to see their overall revenue growth, but we will not be getting any subscriber numbers. 54% of you say pump on Netflix. 54% of you guys say pump. I'm going with pump as well. I think we're getting into holiday season. I think it'll be good guidance. I don't really think it dumps as the S&P continues to do well. They would have to have a really crappy earnings. It is priced for perfection, though. Netflix does trade at a multiple that's higher than Nvidia, and it's up 40% this year. So they're going to have to give us good earnings, but if they do, maybe we get a pump. All right, that's what we got. Thank you, everybody, for being here. Appreciate it. Again, did not mean to trigger people with the rant I went on today about some of these unprofitable companies going to the moon. If you own these names, I hope you make a lot of money in them. I just think for the health of the market, it's prudent for a lot of these names to not necessarily keep going to the moon. They don't have to go to zero, but they can't keep going to the moon. It's just very hard for us to keep up this bull run. And so seeing the S&P go green and a lot of these names stay flat, I don't think that's the worst thing in the world. And hopefully can continue to keep this going for a long time. All right, that's it. Thank you, everybody. Appreciate it. I'll see you guys on the market close. We got the OpenAI stuff. We got the Netflix stuff. We got Technical Tuesday. And then we got Tesla tomorrow. And so we'll do a preview on Tesla going into the end of the day as well. Thank you, everybody. Appreciate it. I'll see you guys on the market close. Bye, everyone.